Okay, so we'll start this budget caucus this evening. Tonight we have with us Business Administrator Larry West, City Treasurer Mitesh Patel, IT Director Jack Reager, Human Resources Director Kaylee Pikluski, and City Solicitor Jess Eskra. And I believe we're going to start with Larry West, the Business Administrator.
Thank you. Good evening, Council. I appreciate you taking the time again tonight to partake in the budget process. Glad to be here presenting tonight. Tonight we have the entire business administration. Mr. Donahue already went through all the departments, and I have Matt Domines here, our finance director, to help answer any of the questions as well. So if it's okay, we'll just get started right in to our presentation. So the business administration, as you know, we manage most of the departments and their finances, the budget, the process, the transfers, the dollars and cents, keep an eye on the dollars that come into the city and out of the city and its finances. The balanced 2022 budget, I know in the budget document it's $116,042,524 minus the $10 million TRAN. The actual operating expenses of the city is $106 million. As of November 1st, you'll see the 2022 revenues. We're holding pretty well at our revenues. We're at 82.67% of our budgeted revenue numbers, $95,941,103.31. And again, that's as of November 1st of this year. Our expenditures for 2022 are at 64.35%, $75 million of our projected budget for the year. There's 20% missing there, but we do have some end of year bills that come in, the MMO, some of the larger things come in toward the end of the year that are not accounted for in the expenditure line item. But nonetheless, we do expect to have the rest of our revenues meet expectation this year, and our expenditures to be a little less than what we had anticipated. So I'll dive into the revenues and expenditures piece here. So 2022 revenues, real estate taxes have been meeting expectations, and our real estate delinquent taxes have exceeded our expectations. I know we talked about them, the mayor talked about it in our opening meeting here last week, that delinquent taxes have far exceeded our expectation by a couple of $1 million to date. In local taxes, earned income tax, they too have been exceeding expectations. We talked about that as well. We talked about the economic development in the downtown, which I'll touch on again here, but our earned income tax has been exceeding our expectations for the year. Real estate transfer tax, again, exceeding expectations. You have the numbers that are on there on the budget proposal. The payroll prep tax, we've talked about that. That is below expectation, but we do believe that we have a promising future that we will get those dollars into the coffers and that we will be meeting expectation. Toward the end of this year, the numbers have been picking up. Matt, right? Steadily coming in. We do expect that will meet expectations for next year. And then, of course, our code enforcement, building permits and licenses both have been exceeding expectations this year. I think that talks to the climate, the land and building real estate transactions and reinvestment in the city. So our expenditures for 2022, our capital professional services, again, we have put more effort into and you all know, I've been here a couple of years now, we have put more effort into a proper capital expense planning. That's the capital budget process we've gone through over the last couple of years. What that does, it allows each department head to participate in identifying those capital investments. We prioritize them in the capital budget. We run through the operating budget. We see what anticipated revenues are, and then we select those priorities for those capital expenditures from that list. So the department heads in the last couple of years have done a really good job identifying those projects in the capital budget, and we've used it as a tool. I've said it here a couple of times. We use it as a tool to navigate for capital expenditures as we go through the operating budget. The administration has also been focused on controlled spending within our budgeted parameters. Again, we talked about holding the limits on expenditures, professional services included. And I'll talk a little bit more about that in another slide, but you'll see that our professional services, although we had budgeted for this year, we did not necessarily expense in all departments on the professional services, and I'll talk a little more about that in a couple slides. Our health care, so we had budgeted 17.5 million this year for health care. We anticipate that having a $2 million savings this year. in our expenditures. Although our consultants are telling us that in 2023, we have an estimated increase of 8.1% in expense next year. Again, that's estimated in our costs. So that loses about 50% of what we saved this year will be added on for an expense next year. And of course, we had unexpected expenditures this year, the rising fuel costs and electricity expenses. There were a couple of questions regarding, and I don't know if I got back to the one transfer from our, from one line item. We did a, lost my train of thought, contingency transfer for electricity. That is essentially double from what we had budgeted for last year. When I call PPL on that, that is not something where we misbudgeted. That is just a change and I know they put in for another cost increase again for next year, but that was indicative of the expenses that we did not see coming.
Was it 41,000?
Nope, no, that's the one you have currently here. No, that's the civil service. So civil service expenditures, there was some expenses that were taken out of an O2 account, a special cities account, where they typically were drawn from. We budgeted them, we took those dollars out of our general fund this year, so we are capitalizing the expense out of the general fund this year from a different line item to pay for those expenses and then reimburse the O2 account. Next year, you will see that those expenses are actually in the budget for next year under our general obligation fund, okay? So they won't be coming out of the O2 account.
And it was for civil service?
It was for civil service, yep. So we had increased in civil service expenditures this year. Next year, we anticipate having additional expenses. We have to fire and police both entry-level exams, and we have promotional exams for next year. So we anticipate another heavy lift in civil service again next year. But we will be expensing them out of our general obligation, out of our general fund next year, not the O2 account. That's why.
I sent you an email in the last couple of days asking about that.
Yep, so I'll answer that one, and I'll get to the other question that you guys sent me on there as well. So any questions on expenditures for 22? No. So let's talk a little bit about the revenues for 2023. We'll start with the real estate. Again, I just mentioned that.
Actually, Larry, before you.
Sure.
I do have one about expenditures. There's, I think it's the professional service for the BA's department. I think it's 109,850 has been added there in professional services. What?
It's been added?
Yeah.
So if you'll see, our year-to-date, we're only 140-some thousand year-to-date professional services for the BA. So a couple things that's transferred over. One is we had identified the Meadowbrook Creek as a project last year in the professional services. We were going to hire an attorney or a law firm consultant and appraisers to start doing the right-of-ways and easements for that project. That did not happen this year. So that's talking to, when I mentioned in my opening statement about the capital professional services not necessarily expensing all the dollars. There's an example there. Our year-to-date is 213 out of the 545 or 500,000, whatever it was, 500. So we did not expense that. Those dollars weren't spent someplace else. The dollars are still there in our revenue. So we just transfer some of those expenses over for next year that we do anticipate getting them out the door next year.
So you're, in front of me, I have the August year-to-date. So are you up to October?
No, this is November.
This is actually today.
It's right up to today, and because I have 132,000, but it's 210.
213.
213.
We also included for next year is the hub test. Is that also included in there? Again, it's a consultant come in that actually helps us identify or verify those nonprofit properties throughout the city. So the mayor had mentioned that earlier about bringing out a hub paying for a consultant to do the hub test. That's also in professional services.
So that 109, it's including, so the hub test, and then it's including the services for getting the right-of-ways.
Again, yes, so we just added those back in, plus the general professional services that come out of the BA, but they're the two big additions that are in there. It's the services, legal services, and appraisers for Meadowbrook Creek, which we carried over from last year, because we didn't do it this year, and the hub test.
All right, this will answer a question that came up in public comment, and I also sent an email, I think, last night about this, but with the right-of-ways, how many, I know we were in the 30s, 38 or so right-of-ways that we have to get. How many have we secured any to date?
We haven't secured any. We haven't even begun the process for that yet.
Okay.
Okay.
I had another question on expenditures, the line item for water. So all the other utilities are increasing, but the rates for water are not?
Pennsylvania American, the water line item, they did not. We did not increase them. Our year-to-date was holding steady, flat. So when we did the analysis on whether or not, what number to budget for this year, we went off the last year, this year's budget, year-to-date projected, and then we added the numbers in. So again, year-to-date still below.
Yeah, water. We budgeted 350 and we're at 310 as of today.
Yeah. So so the next month's bill is probably another $25,000, wherever the dollars are. And so we did the analysis on it. That's what we bank. We base it on that.
Okay, just wanted to confirm that. Thank
Sure.
you.
Yep.
Then the only one on expenditures, so when I went through those expenditures, I looked to see, everything did pretty much seem to hold steady, except those ones I asked. And then the last one is travel. So
Yep.
travel has jumped.
Yep, so and that's, I have that in one of my slides ahead, but I'll answer it now. So travel, the mayor, we had every department had not every department, most departments had a travel line item in it. What the mayor decided, and we decided to do, was consolidate all other departments minus fire and police. All other travel is now under the BA. It does a couple of things. It allows the BA to monitor, make sure that the travel that the department heads or whoever is asking for is legitimate and that we're controlling those expenses.
Okay, every department head, or what, you listed a couple there, I didn't hear them.
Yeah, well, it's the department head, it's everyone, but every department that had travel except for fire and police, they're still managing their own travel. Every other department that was asking for is now going to come through the BA.
Okay.
And obviously, there's a pre-approval process.
Sorry?
I said, no, I'm sorry.
That's okay.
I said, obviously, there's a pre-approval process for travel.
Yes, there has been. I mean, even now, the department heads will ask to make sure that what they're looking to go to or a conference they're trying to attend to, there is a pre-approval process for it. And I'll just tell you, one of the other, how this has come up is we had, the city does not have a true bona fide credit card. We don't have, we do have a card system, but it's a community system through Fidelity Bank. It's just, to be truthful, it's not really conducive to the work that we do here. So we're actually in the process of getting a single credit card under the city's name so that we can procure or process these bills. Most of it, when you're calling to secure hotel rooms or if you're securing the conference, they need a credit card. If the directors are using their personal card, then I have to sign a voucher to pay back the reimbursables, and there's tax included if they don't take the tax off. So it's really a nightmare. So we're trying to streamline that and put all travel into the BA so that we know that whoever's going, what they're going to, and how they're paying for it will come out of travel. Okay? So bumping over to revenues for
Larry,
20.
can I,
Yes.
just one question.
Sure.
I noticed that the health insurance under clerical dropped $320,459. Can you just explain that a little bit?
Yeah, sure. That too, that's gone off of what we can talk a little more about healthcare under the human resources. But when we did the analysis on healthcare for this year, again, we've seen significant savings in some of the departments. Others, not so much. Believe it or not, there were some departments that have actually seen a slight increase in some of their expenditures. But
Was that as a result of contract negotiations?
Some are contract negotiations, some are just, I mean, we're self-insured, so in some cases, it's just the fact that some of our employees are just healthier this year. It's really hard to quantify all of it, but the fact is we've seen some slight increases. Again, I don't want to point it, but we do have an office that had an increase, slight increase, but most of them have seen a decrease. And in terms of the clerical, we've seen a significant decrease in expenditures for next year. So we did, we worked with.
Was there an increase in deductible?
Sorry?
When you negotiated that contract, was the deductible increased?
So the ones, yes. So under the DPW contract, the clerical, their deductibles were increased as part of their contract negotiation. In the case of clerical, it was significant.
And premium share as well?
Yep, and it was significant. So that coupled with the reduction in usage that's what reduces our expenses. We are self-insured, we pay those bills.
Okay, thank you.
Well, I was going to let Kaylee talk about that. We have some other cost-saving measures that we have been taking, and Kaylee will address that in her human resources piece.
So I have a quick question. So there's still a few contracts that aren't settled.
There are three.
Excuse, I said a few, yeah.
Oh, I'm sorry, I thought you said two.
So there's three, and if there's if Me Too clause comes into play, that might affect the savings that was negotiated with the clerical, correct?
That is correct. That is correct. As a matter of fact, we've made an adjustment for that already.
So there's adjustment in place.
Yep,
Okay.
we're aware of that. and you're correct, there is a Me Too clause in the clerical, Me Too to the DPW and so forth. They do have them. And again, I know there's always a lot of question about the time and the money we spend on our contract negotiations. They is a very long, arduous, convoluted process to make sure that one contract that bleeds to another, so on. I mean, it's really a lot of work to make sure that the contracts that we're putting forth, and we're working and negotiating with the bargaining units to make sure that we're not putting ourselves in a bad position either, because I know they do have the Me Too clauses. So we're aware of that, and yes, we did make provisions for it.
So just back to the Me Too clause, just a follow-up question. So if 2 of the remaining 3 contracts go to arbitration, which is probably happening, does the Me Too still apply because of that process?
So we do have language in the DPW contract, so just to be clear on something, the last DPW contract didn't necessarily have clear language about their Me Too. So as part of the negotiation, I'll be candid with you here. Part of that negotiation, I'm sorry?
That's fine.
Yeah.
I just wanted an answer.
Part of the negotiation was that they didn't have very strong language in their Me Too. It was a very important thing for the DPW workers. So that was part of our negotiation with them. We made sure that the language that was in there was fair for all parties concerned. So there is new language in there. That does, I believe there's part of it that is not, they're not allowed to pick and choose what they want out of the Me Too. It's all or nothing. So the point is that they can't just say, we want your pay time off, and not your pay time off, but we want your health care and not your dental, because we have better dental. It doesn't work. It's all or nothing. So some things have changed in the language. It protects the city, and it does give the union's bargaining units an option to change if they feel that they're collectively want to take on the new insurance policy from the different bargaining unit. But it does give the city protection to make sure that they're not getting, picking and choosing what they want out of the different contracts.
I understand that, but the question really is, so say if the police, or say if the fire contract or negotiations go to arbitration and settle that arbitration, does Me Too still apply to the 2 other settled contracts?
To the 2 other unsettled contracts?
Clerical and
Correct.
public works, you mean?
Well, they would have to invoke that provision. So they don't automatically just get them. There's actually a process. They actually have to invoke those provisions.
And once, on one other contract?
On some, yes, if they want it, they so choose.
They
but
have to pick one
invoke-
contract.
Yep, they can't just keep bouncing them around.
No, I understand,
They get one
okay.
opportunity to invoke it. If they don't invoke it, it's not an automatic. It doesn't just automatically happen. They actually have to invoke the provision.
But they can only, say if one is say if 2 are settled by arbitration at different times, and the Me Too clause they invoke, they only do it once.
Right. They
They
can't
can't
keep
come
bouncing
back 3 months later when
That's correct.
something seems better to them.
That's correct.
Okay, I just want clarity for
Yep,
that.
that's clear. That's right.
Thank you.
Okay. Are there any other questions? No? Okay, so now on to revenues. So let's touch on the real estate. Again, I had mentioned earlier that real estate has been, the market has been good for the city. It still remains relatively strong. We had mentioned in our original presentation about the assessed value depreciation. We had mentioned since 2019, the assessed value of city property has decreased $8.3 million. That's estimated as a loss of $588,000 this year for the city, in real dollars. That's not estimated dollars, they're real dollars. So I know there was a question asked, and I think I responded back to someone, maybe it was Mr. McAndrew that asked to do it. You asked what the difference was, what we're going to get in the 3% tax increase. So that number comes to $957,144. And both of those, the 2023 land and improvement, that's the new millage rate that would come under the 3% tax increase. The $587,000 loss, to put that in perspective, and I know I put this in writing to someone, it escapes me who asked for it up there, but if you take the 957, you minus out the 587 that we're losing, the balance, the net balance on the 3% gain from what we're losing in real estate tax over the last couple of years, it's only $340-some thousand. It's not a significant bump. It's all we're doing is keeping pace with losing revenue, essentially. So as the mayor stated in our opening, the next three years or so, 2 years, 3 years, if we could just find a way to hold steady till county reassessment comes, we're hoping that would be the time at which we have a balanced and fair tax assessment. We won't be going back through this appeal every year. Granted, Pell went back, and I think Matt could talk a little bit more about this. When Pell was here, they recommended that the city increase its tax millage every couple of years, a couple of % to keep up with the cost. I think that the mayor made it pretty clear in 2021 and 2022 there was no tax increase. I know the city council back in 19 did indeed provide for a tax increase in the 2020 budget, but this will be the first since then. And again, it's a modest tax increase just to help offset some of those declining revenues in real estate. Moving on to refuse, again, large sum, the 6.8 million current, 1.33 million delinquent. Mr. Schuster had asked the question why there was a reduction on it. Again, we believe that delinquent tax, the refuse universe, is actually getting smaller. So we are just being a little proactive with it and making sure that we're not over budgeting. It's a conservative number, but we estimate that's where that number will land.
So Larry, yeah, I'm sorry. I think you budgeted 2.5 million last year for delinquent, and you collected 1.33 million?
Yep.
So this year, you're only budgeting 1.3 million?
That's correct. Yep.
So maybe Mr. Domines has the year-to-date number. We only have that August number, so when I asked
You have
last week...
year-to-date. You have year-to-date in refuse collection?
budgeted, but our year-to-date at August was 1.6.
You want year-to-date for the refuse?
Delinquent refuse,
Delinquent refuse is at 1.9,
1.9.
and the regular refuse is 6.2 as of today.
6.2.
Do you
But
feel that we're...
you're anticipating that dropping down to one?
We're anticipating that the universe of collection for delinquent refuse fees that universe is getting smaller because we're collecting more on those delinquencies. So
What
we
would
are
you attribute
estimating
that to?
I'm sorry?
What would you attribute that to?
Well, I
fact that
think,
you're
I think
collecting.
there's a couple of things. I think that we've been more aggressive in some of those delinquent tax collections, but I would also say that having that the tax bill having the refuse bill and the tax bill has reduced that because folks are paying their tax bills.
Because they rolled it into...
That's correct. So it's not necessarily delinquent because they're not paying them separate.
And I
So
guess
they're-
there's been a dispute about that
Yep,
as well.
they're not missing it, they're not
No,
misplacing
but there's
it.
been a dispute that it's supposed to be kept in a separate account,
Okay.
correct? Isn't there a suit or something to that effect?
Do you want to talk to that?
We do have a pending class action regarding the refuse fee in general that's scheduled before Judge Gibbons at the end of January of 2023. I'm happy to provide you with additional information and insight in executive session.
Okay. Yeah, it'll be interesting to see how that plays out, but...
So just in terms of the delinquent refuse,
Yep.
it's been in the paper 1,000 times, I feel like, about that total number, right? That goes back to 2022 or 2002. But at some point, there's going to be those accounts that are just, and even at this point, there's those accounts that are just uncollectible at this point. Like, there's no way we're ever going to collect that money. So is there a way of whittling that down in terms of, identifying what is uncollectible?
Yep.
If someone, for example, if someone owed something from 2005,
Right.
Maybe they have since passed away, that, the estate has already transferred property, that would be considered an uncollectible.
Right. Those numbers, they're not present in that number, right? So, but you're right. At some point, they become uncollectible, and we'll end up running them down. I know we just extended for Portnoy to do some of the 21 and 20, I believe, right? We just did for Portnoy, right? Is it 21 and 20 or 22 and 21?
21 and 22.
21 and 22? Okay, so thanks.
Because really, we don't have,
Too many numbers, 21,
yeah,
22,
because
23.
really, the original Portnoy contract was only 20, prior,
20 and prior.
Yes.
Right. So at some point, we could go through those delinquencies, and we'll end up writing them down and writing
Yes.
them off on it. So yes, but those numbers are not in that 1.33 million. That's what we anticipate collecting in delinquencies.
Yes. But in terms of that greater uncollectible number that's
Right.
been out there,
Yes.
we all know that that's not.
Probably not.
We're never going to get that total number.
Right.
So one more for Mr. Domines. So our year-to-date on that delinquent refuse is 1.9 as of November. Have we had a average monthly? Has it looked the same? Are we collecting the same average on a monthly basis? Like, can we project what December is going to be, or those numbers are all over the place?
I can't project, I have to look at the account, see what it would be for December, what it would be like, because sometimes when we do these, I look back from last year and then 2020 and try and get the
I
historical.
mean, as of November, we're 1.9. Are we going to break the 2 million mark this year, or it's going to stay around 1.9?
Well, it's 1.9 right now, and as of today, so that's, I think we will. But, we got a whole month left here. And again, a lot of that comes from the collector, Portnoy now, so they usually submit their statements, I think, to Mitesh, but they come in pretty regularly, yeah.
And also at the same point, there's, before we put the refuse on the tax bill, the refuse collection rate was only in the 65-70% range, whereas, since it's been on the tax bill, it's more in the 90, that normal real estate collection rate. So that's also decreasing that pool of what is delinquent there, too, right?
And because of that, because they're not losing that bill, not losing that separate bill, they're paying the $300, so it's not, they're not becoming delinquent even by accident, they're making the payment.
Still, to reference what was told to us, and with the extension of that contract, I think they identified 2 million, but we're still estimating, we're still line iteming it as 1.3, although they said they've identified about 2.
I think 1.3 million is fair.
Yeah.
Again, in an atmosphere here where you're not really sure on a delinquency, we're grateful that if they could collect a 2 million, that's great, but we're going to hedge on that. That universe is smaller, and that's where we're going to go conservatively. Okay. The last piece I have here on revenues for 2023 are the earned income tax. You'll see we have steady growth in the earned income tax. It has been for the last couple of years. I think a lot of that could be attributed to the continued downtown redevelopment and also some strategic community reinvestment. There are certain pockets throughout the city that has seen some significant home buyers and neighborhoods transforming. You have in West Side, you have the Neighbor Works program, the block by block. We have some streets, some neighborhoods, or I forget the name of the program, where they invest dollar for dollar. If you put $5,000 up to do your sidewalks or your facade enhancements of your home. So I think those things have changed, and I think that it's helped in our earned income tax. You have higher wage earners, in particular in our downtown, where you have some of these apartments that are, in some cases, are between $1,800 and $2,000 a month. Significant wage earners. That EIT is actually transitioning or translating to a higher income here. And we've recognized that. Last year we had 27.7 or 9 million estimated last year. We are going to far exceed that this year in terms of our earned income tax collection. And by the way, the 30.9, I think, is still a bit of a conservative number. I think our projections could have us north of 31 next year, correct? If that's just a little bit north, yeah, it'll be close, but that's still a little conservative. So expenditures for 2023, we started working on City Hall. We did the South Tower, the roof project, and repointing the exterior of the tower. We are continuing with that restoration process. We had an opening meeting last week or the week before with the consultant to bring in the next round and get it out for bid and get the other 3 towers and the remaining part of the roof that needs to be touched up, reslated. So that process has begun. There is a slight increase in next year's MMO. It depicts up there 14.8 million to 50.2, about a $300,000 increase in our MMO. Debt service.
Could I just stop you right there on the MMO?
Sure.
Excuse me, just to clarify something. So that slight increase is still based off the calculation from the state that we got 2 years ago, correct?
21. Yep.
So in January or February, right, they do another recalculation based on our fund's performance, but that wouldn't be
Until the fall.
implemented until 2024, correct?
Correct.
Okay.
2 years, 2024 and 2025, they'll use those.
Those numbers.
Just like
Yes.
they're using the 21 for 22. And
Yes.
23. Yep.
So realistically, in 2024 and 2025, we could expect an increase in our MMO payments.
That's correct.
Okay.
That's fair, unless something drastically changes between
In
now and January
60
1st.
days.
If you have any magic, feel free. So debt service, continue to hold the line on borrowing. This year's debt service payment is $10,586,522. Our overall debt service as of now is $77.4 million.
Principal, yeah.
Yeah, principal, $77.4 million. Again, it's a significant decrease over the last 5 or 7 years. I think it was 2016 or 17 when we were at $146 million in debt. So the city and the administrations and city council have done a really good job holding the line on keeping the debt at a minimum and paying down the existing debt service. We have talked to our consultants. There really is nothing we can do to redo some of the existing debt. We're just going to hold steady, especially now with the interest rates where they're at. So that's going to be our debt payment for a couple more years. In 2030, when we lose about 50% of that expenditure, the city will be in a much better place, 2029, 2030. Strategic capital investments, again, we talked a little bit about it on Tuesday night and last week. Public safety vehicles, we talked about times, delays, having availability, police vehicles, plow trucks. The fire chief mentioned Engine 4. So we continue to make those strategic capital investments to make sure that our public safety sector is still funded and we have the right capital investments going in to do the work that we need them to do. So salaries, again, it's always an expenditure, but we continue to invest in human capital, and I'll talk a little bit more about that a little later. Our workers' compensation fund contribution, another significant number, and I would like to talk a little bit more about that, and I think Kaylee could probably talk a little more in depth on it, but last year, for 2022, our annual account, we're required to put $3.5 million into that account. That's the account that we run just normal, regular workers' compensation accounts payments out of. Next year's projected, we need $2.9 million. Again, there's some residual left in that account. We did not fully extinguish that line item, so we do have some dollars, and they anticipate it being $2.9 for next year. There's the healthcare costs, again, the 8.1% projected increase in cost next year. And then information technology, we have short-term, long-term investments, cybersecurity, hardware and software upgrades. That is a continuous project. The things we buy today, by next year, most of the stuff is antiquated or obsolete, and we continue to make great strides in our IT space. And I think Jack could talk a little more about that, what we're looking to do for next year. So if I can, I'd just like to end that piece of the summary about where we were for 22 and 23. Obviously, Mayor Cognetti is not here tonight, so as part of the process, I'm going to cover her little piece of the budget, talk a little bit about the standard salary, the things that the mayor only has herself and 2 others working in her department. So the mayor does ask for slight increases in salaries. Again, it's across the board. It's nothing significant, but there is an ask for standard salary increase there. And dues and subscription, this one's a little different. The mayor, as you know, is very active, not only just locally here in the state, but also nationally. She serves in the U.S. Conference of Mayors. We are active with the Pennsylvania Municipal League, but she did ask for an increase in dues and subscriptions, looking for a fee and due subscription for the National League of Cities. It too it's a membership account that allows for not only the mayor and administration to participate, but it also allows city council individuals to participate in their programs as well. And the mayor thinks that it's a good opportunity for not only learning for administration and reaching out and working with other municipalities and cities, but it's also an opportunity for city council to engage in their conferences and their like. So the mayor put that out there, and she also, I think it's important to note that all her travel that she does, she pays out of her pocket. There's no expense on the city for her travel. So they're the only 2 line items that the mayor has under her budget. So I'll take any questions you may have on her 2 line items. If not, I'll move on to the business administration.
Claire, can I go back just 1 second? I'm sorry. Under non-resident tax.
Yep. Yep. The non-resident EIT says 600,000.
All right, so you budgeted 100,000 and nothing was collected.
Yep.
So now we're budgeting 600,000.
Yep. So, Matt, do you want me to explain it? Sure. Yeah, there's an answer for it.
Yeah, Yeah, Councilman King, this is something I've looked at for many years and tried to get an answer, and I finally got an answer here this year. But what it is, Berkheimer, the non-resident tax that this is for individuals who work in the city of Scranton who live in a municipality that does not have an earned income tax. Then the city's rate is 1%. So many municipalities in Pike and Wayne and Bradford and Susquehanna counties do not have an earned income tax, and those individuals who work here in the city who live there, we get their earned income tax at 1%. So that's what that is. And it's always been coming in to the city, but it has never been broken out. It's been budgeted. I think, I checked with Andy, and I think 2014 was the last time that it was actually recorded, and somehow it stopped. So it's just been getting aggregated into the EIT number itself, the total current, and it hasn't been getting broken out. So we want to make it more transparent and break out that non-resident or income tax. And we,
So it wasn't broken out this past year either?
no,
You're working toward that?
exactly.
And in working toward that, you think that you're guessing that it's going to be 600,000?
Oh, no. No, we looked at the past records because Berkheimer's been sending them for years, but it just hasn't been getting broken out in the city.
So that number's based on Berkheimer doing some research and finding out, kind of coming up with...
No, well, Berkheimer's always been sending it that way, broken out, but in the city it hasn't been broken out. So they have the past records, Berkheimer has had this record. That's why we based the 600 off of, but it just in the city here hasn't been accounted, it hasn't been broken out in the accounting.
So you're pretty confident that we're going to realize that 600,000?
Yeah. Yeah, and I think this year, I don't have it in here, but I think this year was, when I looked at it last month, was about 500, probably about 500,000. Yeah, I don't have it off the top of my head, but I can get it for you.
Sure.
Yeah,
Okay, thank you.
you're welcome.
Thank you. Do you have any other questions on the mayor's, Mom? So off to the business administration. Again, standard salaries, all total, there's asking for an increase of $89,271. That's all positions under business administrator, but most of that is two-thirds for the year, two-thirds of the remaining year for the finance director's salary. As you know, we do have it funded through April of this year through a finance donation. So that number ties up the remaining two-thirds of the year for the finance director, and the rest of the increases we're asking in just standard salary increases in the BA. Professional services, you had touched on this earlier, Councilman Schuster, Mr. McAndrew, I'm not sure who asked here, but I bring out there's the professional services, the increase that you're looking for. It's the Meadowbrook Creek carried from 2022 for legal and appraisers for the DEP flood control project. Again, this is phase 3 of Meadowbrook. That takes us from Green Ridge up to the cemetery. And there's the HUB test in there as well, consulting services to verify non-taxable properties. Banking fees is another number you might see. There's an increase for banking services for both traditional electronic costs. So every time we do an ACH or electronic transfer, this is a cost that the city had not necessarily seen a lot of in the past, but a lot more transfers and a lot more payments are being taken in through credit card or through an ACH transfer. There are additional fees associated with that in the banking industry. So we did have an increase this year. I think it was a $25,000 increase or something like that from what we had budgeted. But anyway, we made sure we made that adjustment for next year going in to make sure those banking fees are covered. And there's the travel piece. All departments, travel expenses will be transacted through the BA except for fire and police. We talked about that already. Again, that's an increase you're going to see under the line item in the BA. Non-departmental, I know it's not usually covered, and I'll cover it here in the BA. Obviously, we have a lot of nonprofits, a lot of community groups that rely on city dollars to provide the services they do. No different than ECTV, Scranton Tomorrow. Some things are passed through, but the veterans groups and whatnot, I think we've held pretty firm and steady on the non-departmental in terms of what we could do to help those groups throughout the city. The mayor is working with through our law department and community development department to make sure that as we move forward, those dollars that we are pushing through city for some of these nonprofits, that we do have an MOU to make sure that those dollars are being expensed properly and accounted for. They're not just writing a check and going to who knows where they land. But we are doing a better job of the MOUs and making sure they're accounted for. And then there's the grant match. There's another line item that has significant dollars in it. Those dollars, the grants that we have received, we're fortunate to receive for the streetscape on Biden Street, some of the stormwater projects we have, and then of course City Hall. all of them are RACP dollars or other programming dollars that require significant dollars from city to match those up. So we put that into the grant match. A little bit of good news, I guess. And Matt could talk a little bit more about this too, is the tax and revenue anticipation note, more affectionate as the TRAN. In 2021, the TRAN was 12.2. For 2022, it was $10 million. For this year, we are proposing 4.9. That's not an arbitrary number. That is a number that we put through, that we have to fix our existing assets and our cash flow. There's a determination of what we're actually allowed to borrow. So the good news is we're only allowed to borrow up to $5 million. The good news is we don't need to borrow more money, because if interest rates the way they are, I think our trend is at 3.75 or 3.7?
3.79.
3.79, which would equate to, you guys could tell the numbers that it equates to.
Yeah, we did the calculation with PFM, and at the 3.79 for the 4.9 million, just the interest to cost, if you carried it full term for the 12 months, would be about $183,000 or $185,000. At a $10 million TRAN, that would probably double. So the reduction in the amount of the TRAN is saving us money on interest costs this year. And most of the times, the city does pay off the TRAN before that. This year, I think we had it satisfied in July or August, and the same thing last year. And again, that money is coming from the earned income tax, part of the escrow with the TAN, so that is paid off through the collector. Berkheimer actually transfers that into an account, and every month that gets brought down from the time we start receiving revenue in January, and usually by July, we hit that satisfaction, so we save money on interest on that too.
And I think just in comparison to interest rates, last year's interest rate was what, 0.75?
0.83.
Yeah.
0.8.
Yep.
Yeah.
And same process, same everything, less dollars, significant difference in the percentage of the
And
interest.
so, and you said it's 3.79.
Yeah.
Is that subject to change
No.
between now and when we get the TAN, or is that's a
I
set?
believe that's a fix, and I believe the legislation's actually, you're going to have it this week for
Okay.
that. Yeah.
And I think the letter of commitment from the bank is for 60 days or 90 days, so, yeah.
So that rate's locked in now.
Yep.
For the 60, 90 days, yeah.
Yeah.
And that just started, we just confirmed that last week or the week before with the bank, so we have plenty of time on it, so. And the last thing I'll talk about from the business administration is our labor contracts. Mr. McAndrew alluded, we've settled DPW this year. We have settled on the clerical union last year, which runs out at the end of 2024. We are currently negotiating with Single Tax Office. Those negotiations have been ongoing, and they've been moving along. Feel pretty confident that we could come to an agreement in short order with them as well. And the last two are the fire and police, which we believe are leading to arbitration for next year. So as far as labor contracts go, again, we're working on it, making sure that things, that we're talking about negotiating are fair for both sides. And we're working really hard, and it's been a good process. It's just been long, and it's a lot of work.
And the STO negotiation is a joint negotiation with the school district, correct?
That's correct. So we have, not only do we have the business manager from the school district and their legal team, it's myself and, Kaylee and our team. So it's a lot of calendars to get together to make sure it happens. But we've been fairly successful with it in the last couple of weeks. But it is joint, that's correct. So from the BA department, obviously I just gave my pitch. We do have Mitesh and Jack and Kaylee are here, and of course Matt. And I didn't put Jess, because she's not necessarily part of the BA team, but I appreciate your attention here on this, and if it's okay. If you don't have any more questions of me for the BA, I will move over to Mitesh, our treasurer, to talk about his budget.
I
Go ahead.
have one more question on the line item. I'm not sure if you touched on it or not. I didn't believe so, but the unemployment insurance change from 100,000 to 20,000.
I'm sorry, I couldn't hear what you said.
The unemployment change from 100,000 to 20,000.
The unemployment,
Line, yeah, the unemployment compensation. Yeah, we brought, that was higher because of COVID, and I think the
That's what I
unemployment.
was thinking.
So with the experience of that, now we brought that down to the 20,000 for the unemployment, because that was really a COVID-related increase.
Right, because the year-to-date is 0.
Yeah.
That wasn't spent anyway.
Yeah.
Okay.
we had an ask from the paper, we had another issue with unemployment compensation and lien on it, and we rectified that this morning. I thought, I apologize, I'm sorry for the
No,
blank
sorry,
look.
sorry, confused.
Any other questions for the BA? Mr. Schuster?
Go ahead, I'm going to take it off track a little.
Was there, under debt proceeds for miscellaneous revenue, last year there was $3.2 million budgeted, and I don't think there was anything collected, is that correct?
Miscellaneous revenue?
Debt proceeds from miscellaneous revenue, yeah, under miscellaneous revenue. I think there was 3.2 million.
Well, you might be looking back at 2021 because we did have the Webster note that was from 2 years ago. That was debt proceeds from revenue. Let's see what's out here.
Yeah, that was a note taken out to
That was taken out.
to take advantage of the recalculation in the pension system.
Okay.
We didn't want to spend we didn't want to spend a certain portion of the sewer money until that lawsuit was settled.
Right.
So, but in order to capture the recalculation in the MMO, we took out a 5-year debt, I think it was, that we then paid off in 2 years.
Right.
But we used, the money we did have to put into the pension system set aside as as collateral for the debt that was issued.
Oh, okay.
And we no longer have that.
That was done to take advantage of the recalculation of the MMO.
Okay, thank you.
Yep.
So I had one on the other salary miscellaneous, that line item has gone up about 71,000. Just the 2021, that we didn't have.
For the
any.
BA?
2022, yeah, there was a $4,000
Yep.
dollar line item, and now it's 74.
So that line we left in there, that's where, when Mrs. Cipriani mentioned about having those shared department, there was 3 positions coming out of OEC that we're sharing, cost share with the BA. That's where those dollars are coming, that's where those salary dollars are from, for those 3 positions that we're sharing with the code, with OECD.
So they're other bodies, or it's the piece that Mrs. Cipriani's doing separately?
No, it was in her proposal, their bodies that they were proposing to add, it was in her proposal that she had the bodies.
Okay, and what were
So,
they?
but I think is it ARPA that covers
Covers their half.
half, but then
And we cover the other
any
half.
non-ARPA work they
Yep.
do, the city covers that time.
Yep.
Okay.
Those positions, Councilman Schuster, are in the OECD budget.
Yep.
They're the last 3. It looks like the DEI coordinator, the digital content coordinator, and the development. No, not the development, the one above it, outreach coordinator.
Say them one more time.
Sure. The first one would be, make sure I get these right here, outreach coordinator.
Outreach coordinator.
Yep. Second one is DEI coordinator. And the third one is the development coordinator. I think that's right. It's hard to read. But one of them, I think,
I think it's digital content outreach coordinator,
yeah.
and then the
Yeah, the
DEI
last-
is
the very
what?
last one?
Diversity, equity, and
Yep.
inclusion.
Yeah, the very last one I know is split with the development coordinator is split with the with the school district. Yeah,
Yes.
yeah, okay. So it'd be the 3 above that, I'm sorry. Print's so small, I'm getting too old.
Are there any other questions for the BA?
I had a DPW question if you want that one.
Sure, go ahead.
I did get an email, I think I forwarded it along. It was an email about the vac trucks and the leaf pickups. Are we doing those leaf pickups at night?
Are we doing them when?
Are we doing them at night?
No, not that I'm aware of.
Okay, I
You
think
mean the evening
I forwarded
hours?
an email over to you in the last 2 days, and it was something with like leaf collections at night.
Well, I know we're behind in leaf collect, listen, I can't say definitely they're not working overtime for it, because we did have, our new leaf truck was damaged in an accident, so we're back to the old one, it requires 2 individuals to use it. But
Is this the vac truck or a leaf truck?
the leaf truck,
Okay.
yeah, the vac truck has been out doing catch basins, the leaf truck is a different piece of machinery. I also know we've been trying to get Nayak Park, the leaves picked up there because of the lights for the Christmas lights up there. So we have been working, and I can't say definitively they have not been working evenings to pick up, because we have been behind because of the vehicle that was damaged, but I'll find out for you about that.
Okay, so they may be,
I saw one the other night, it was dark, so I mean.
Was it dark?
5
Yeah.
o'clock.
Yeah.
It's dark outside.
They may be working 4 hours extra overtime just to kind of catch up on things. It's kind of hard to pick up leaves in the dark. That's why I can't imagine they're doing it, but I don't know for
so
sure.
they may be working like.
They may be
4 hours
working
or
late,
something.
they may be working an extra 4 hours. But I do have an answer for you regarding the paving. You did ask about the overtime for Sunday, Monday. It's true, they did. So that was a project that's been on the books for about 10 years, apparently, that we were supposed to pave the parking lot up at Engine 10. It was a dirt lot, steep hill, had not been taken care of. It had been on the books for this year to have that rectified. If we were to sub that out and have a contract, it would have cost us 3 times the cost, even with them working on Sunday. So we had a limited window. Because of weather, it's getting colder, inclement weather, and the fact that the batch plants that make the asphalt, they're preparing to close. They only have another 20 or 30 days before they close. I think they're closing the end of the month or maybe the first week of December. So time was of the essence. We had it. There was an opportunity, so we did do it.
Yeah, so we're getting there with the asphalt, but was it also the holiday? I feel
It was
like
a holiday, yeah.
weekend was the reason that it was being done at that point in time.
So it's, it's one thing, to put that type of that scale of an operation together, it does require more than 2 or 3 workers to do it. It required 8 or 9 driving trucks, hauling the asphalt, equipment operators, the roller, the paver. It takes a lot of coordination. It is later on in the year. It's the holiday season. It's difficult to get everybody in, especially the equipment operators you do need. So there was an opportunity. We just seized the opportunity at that time to take it. So, yep.
All right.
Okay.
Thank you.
Yep. And by the way, they did a great job. I'll add that. Yeah. Okay. Okay, great. I'm going to move on to Mr. Patel. Okay. Yep, sorry.
Hello, Council. Hello, everyone. Thank you for giving me an opportunity to be here. This is my first time. Those who don't know me, my name is Mitesh Patel. I am the city treasurer. I have been residing here in this Scranton since last 15 years. So this is my bureau. Okay, so basically my department overview, we work mostly as the custodian for the physical assets. And I am also certified as Act 48 tax collector in the state of Pennsylvania. My department or bureau, I can say, work mostly as an liaison between the other entities. You can say single tax office, tax claim bureau, or other entities. We are technically the face for the constituents regarding the housing taxes. Whenever they have questions, they do approach us, they do email us directly. Currently, we have 2 people staff. Both the positions are union clerical, so they have their own fixed duties. So what we did since when I came on my position, so far we processed 280 exonerations. And the most important thing is that we digitize the whole process. Now people can go online, they do apply for their exonerations, for their refunds online. They don't even have to come here at the office. The next thing we did is the data was mostly all over the place, so I tried to centralize the data. We scrubbed a lot of data. We did a lot of cleaning in the data so that we can have at least around 80% of accuracy in the data. We are still going to work on those data so we can have a much more better, clear picture. Then another thing that we accomplished is the permanent exonerations. There are many residents who had a complaint about getting the refuse bill for a vacant lot, for converted units, something like that. So I did work with the assessor's office and try to give them the correct data so that going forward in 2023, hopefully that error will be rectified. In terms of Act 98, that is another section that we handle. We again digitize the OpenGov. We had the auditor comes in. We did go through a lot of the accounts where we can aggressively try to reduce that amount that are sitting in our bank and give the money out back to the proper entities who has belonging that money. We also improved the accountability. We try to provide some transparency where people can see what process we are doing and where in the process we are there. So for example, when we say the exonerations, which is already started for this coming year also, people can see where actually the file is in the process, how long they have to wait for their money to be refunded. So all this thing, we try to implement the transparency. We provide the accountability because as an accountant, not only we try to digitize the things, but also record things where somebody can go back past 5 years and see my work and easily can find the stuff, instead of just having some random numbers there. We also participate in different types of sales. That includes the repository sale, upset sale. There are many kinds of a sale. So we do participate in that also. I also represent in the Lackawanna County Land Bank. We did, as I said, we modernized the revenue deposits and disbursement for the future. And that's the small little budget of Treasury. Any questions?
Are there any changes that you look forward to in 2023? Anything else that you see that needs to be worked on in the department? I know you mentioned some of the modernizations that have taken place, and I know even with the previous treasurer, there are a lot of changes, positive changes in the department that have made it easier for others.
Yes. So as I said, the modernization. So everything previously was on paper. It was all on the paper. So if somebody has to find something, they have to deep dive into those piles of files. Now everything is digitized. Everything is scanned, properly attached to the transaction. So if you say, okay, there is a $10,000, what does that $10,000 mean? If we have a memo attached, if there are details to them, we can certainly say, okay, this $10,000 is a liability. Liability to who? There should be a proper record. So my cashier, I have trained those cashiers. I have implemented best practices where they can apply all those details in every single level. So as I said, going down the road, even after 5 years, if somebody comes and see my work, they will still easily find out, okay, what's with that $10,000? Oh, it's a liability to whom? All those details are there. In terms of the progress, and in terms of the things that we are supposed to do in going forward, I'm working with legal department and other department, IT department, to centralize the data. The data is all over the place because this is a modern, nowadays 21st century where the data speaks for itself. The number speaks for itself. So we are trying to centralize the data. We are trying to clean the data as last time, Mr. Mark McAndrew did ask why there are some issues regarding the port knob. So I did explain you that the data was not properly cleaned. The same old data was handover, and when there is a transition, data do get corrupt. So those are my biggest challenges that I'm working on, and especially the Act 98 money. There has been Act 98 money sitting there. We need to get rid of them because otherwise, it's just going to grow up. So I'm working with the licensing department to see whether those things are cleared or not, and moving forward those Act 98 also. So these are my small boundary, and I'm playing with those boundary.
Thank you.
Welcome.
Well, I'm glad the exoneration process velocity has increased, and people are getting their money back that they're actually owed and never should have been billed. And the issue that I brought forward, is that still occurring? I know it was sporadic, where people are being put on in delinquency when it shouldn't have, because their concern was getting on the website as owing. Think about it, So has that decreased?
Yeah, that has decreased.
Is that correct? Have you corrected that since our last conversation, or there's less of it, I should say?
I haven't corrected all of them because we cannot put light on everybody, because it is on a case-by-case basis. For example, if somebody receives a notice from Portnoy saying, hey, you are delinquent, and if somehow they might have paid already, or the property has been vacant, they can apply for the exoneration, and I can work from there, and then I inform the Portnoy on a case-by-case basis, because without the evidence, I'm not going to do anything. So after I have all the evidence, after I'm satisfied, okay, whether they have paid the money, or they might have been exonerated, or whatever is the scenario, I inform the Portnoy, and then the Portnoy will take out the lien from the property, because they're not supposed to be technically any liens on the property. And they do sometimes, I do ask to give them an apology letter, there was a misunderstanding or whatever, so sorry about the trouble that the residents are facing. But yes, so far we are working on a case-by-case basis, because going on each and every property, it's a little bit of tough.
Thank you.
Welcome.
Any other questions? Thank you, Mitesh. Next up is going to be IT.
Thank you very much. My name is Jack Reager. I'm the Director of Information Technology for the city. Part of what I'm hoping to have a conversation about with you all today is more of what we do and how we do it. There's been a number of sort of questions and items brought to light throughout this process. I had an opportunity to sit in that I think I can help sort of shed some light on in terms of how individuals are digesting city services and how we're facilitating that through the Department of Information Technology. So if we're going to get into it, Larry. So at a very high level, it's important for everybody to understand that we actually support the entire city. These are your first responders. These are every individual employee within the city payroll. So we have just about 500 employees, 17 departments, 20-plus facilities citywide. We support all of the operations that when a constituent comes to City Hall, if they find us on the website, if they reach out to a department, we're sort of single-handedly handling that in-house at this point in time. We ensure all employees have the connectivity, technology, and software needed to complete their responsibilities in a timely manner. When I joined, one of the comments that was made to me by the mayor was, we're a professional organization, we want to make sure we're putting our best foot forward. And we're able to facilitate that as we sort of look at our technology investments. We look at what we're doing in terms of supporting our team, and that's something that my group works with on a daily basis. We're looking to maintain and monitor the cyber threat posture of the city. The reality is, and I'll talk a little bit more about this, we are woefully behind where we should be as a city. We have not invested to keep our systems in place. We've not invested in our hardware to keep that up to place. That's something that we're tackling day by day, and we will be this year as well as next year. Larry had pointed out that some of our capital improvements will focus on additional hardening of our environment, adding new processes and procedures, adding systems in place that need to be updated and maintained, so that also falls under our purview. Currently, I have 3 full-time employees, including myself. We're budgeted for 4. We made 2 offers this year, both at the $45,000 freight for an individual to join the team. Both were declined based on salary, so it's something that we deal with on a daily basis. I know we've talked about dollars and cents in terms of staffing, and what I hope to impress upon you tonight is just the critical nature of these services and what we're doing and why we're asking for what we're asking for. We can go to the next slide, please. So if you think about it in terms of numbers, and hopefully we all sort of think about this on a regular basis, we have 200-plus cameras and devices throughout the city that's supported by the IT department. That includes cameras at intersections, that includes devices within first responder vehicles, and includes just about everything. 500-plus employees we touched on, 30-plus emergency vehicles on the road today. The chief is pretty excited that we're going to be getting some new ones. We will have those fitted out with technology. They will be deployed, brought in-house, and then supported by us as a go-forward. 20 facilities citywide. If you think about the firehouses, we touch those as well. One of the things that, when I joined in March, we had already started down the path of was the adoption and implementation of the OpenGov system. So when we talk about the hardware and we talk about the connectivity of the city, then we can start talking about the productivity and the software associated with doing day-to-day business. So OpenGov at a high level is adding a layer of service that the city hasn't had prior. It's a significant investment. It's a significant level of training and adoption that hadn't necessarily been in place for previous systems. This one was a little more complicated. Once we got involved with it, we were tasked with getting staff up to speed and working with it. Just in terms of numbers, since it deployed 4 months ago, we've seen $371,000 come in digitally through OpenGov, through citizen services. This is specific to licensing and inspections. These are dollars that very easily, and I know Eileen touched on, individuals were able to make this off hours. They didn't need to come into the building to do this. They were able to do it with a credit card or an ACH, very limited fees associated with it, and facilitated a line of revenue that we didn't previously have in place. We currently have 80 users on the OpenGov platform in terms of staff and folks across the two major tranches. We'll talk about financials and we'll talk about citizen services. In financials, we have processed 4,665 POs already this year. To put that in perspective, I think you're all aware of what the previous systems were. Now we have checks and balances in place. We have a digital platform that will keep this archival over time. We have access to it at all times. It is light years ahead of where we were previously. In terms of, and I will confess, accounting is not my background. From a journal entry standpoint, we have individuals who have gone in and made 2,700 individual entries. So when we're thinking about the business and we're thinking about our revenues and our expenses, this is all being handled through OpenGov at this point in time. So it's critical that we train our people, we make sure they have access to this system, we make sure that they're able to use this system at their own pace, and our department supports that as it goes forward. When we think about 2020 and what we've attempted to sort of work through, we've had that integration and adoption. We're handling the user training. We're basically facilitating that across all 80 users. There will be staff that comes in-house. They will be trained up. They will work with the tool set. That will be facilitated through my group as well. We've been working towards enhancing our cybersecurity posture. In 2020, 44% of all global ransomware events were targeted at municipalities, much like us. It's 44%. If you think about 2021, 6 out of 10 municipalities in the United States were targeted for ransomware. Cybersecurity is an investment that needs to be made without hesitation. We are woefully behind where we should be. We have hardware in the field today in our vehicles, in our offices that are not able to maintain what we need to from a systems and a security standpoint. Rip and replace needs to go. It's been sitting there for 5+ years. Although we can work on it, it puts us in a vulnerable position. So we are handling that with some of our capital requests as well as what we're doing this year today. Asset management and inventory. 500+ employees, we have a lot of gadgets and blinky lights and systems around it. We need to keep that up to date. We need to know where everything is. We need to know where the dollars are going. We've been putting those pieces in place and building on what was already in place.
So are you actually like asset tagging each item?
Correct, yep. As well as we have a digital database that will go out and touch every device that's connected to our network.
It wasn't done prior, correct?
I'm only aware of really what I walked into at that point in time, so I don't know.
Well,
I
I'm
can
glad it's
speak to.
happening. I'm glad it's happening.
Great, thank you. I am too, as a resident. We went through and we implemented a city staff managed and monitored help desk. I think some of you have dealt with Brian, you've dealt with Eric. Simple things like, hey, reset an email password, as much as we need hardware deployed. Comes in, we task it, we manage it, we go through, and we deploy services. So we've changed how our help desk deploys. We have updated our digital retention policy. So there's systems in place that ensure that we match or we meet all of our digital retention policy requirements. 7 years. You probably all saw a little notice pop up on your email that says this is kept for 7 years. We are ensuring that these processes are in place and executed properly. As I mentioned, this year we've
So
put up.
just to realistically touch on that, right? Like,
Yep.
So we could get an email, we could accidentally hit delete. That's still actually retained.
Correct.
For.
Yep.
Yeah, okay.
Redundantly as well. It's in more than one system.
Yes.
Beyond yours. So a lot of time with my team has been put into the camera system this year. It's a significant investment by the city. It's important. It's important for any number of reasons. The inner workings of it and the specialized vendors that we work with that actually deploy some of the hardware when it's put in place for the first time. We're not climbing poles. It's something that has been an ongoing build-out. We've been successful, or Eileen Cipriani's group has been successful chasing some grants that will help us build out it even further. As that builds, we'll talk about our professional services bucket. Every device that hangs on a pole carries a yearly license with it. So a lot of times we don't think about that. We need to budget for it. We need to know as we grow these things out, we need to pay to keep it in place and keep it operational. As I mentioned, we're going through a hardware refresh. We've been doing a bit of vendor management. So with all of the service groups that we actually support, there are specialized groups that need to come in and sort of help us deliver service. So we'll see that on the police side. We'll see it on the fire side. We'll liaison with those groups, and we'll make sure that we're delivering the proper services and really facilitating what they need to make sure they're able to do their jobs. The last piece I'll sort of touch on that we really kind of focused into this year and is more of a go forward, and I mentioned there's been some conversations as we've sort of watched this, it is data and analytics and how we can really start thinking about things. So this snapshot, it's about 90 days. It's what the website's currently doing. I can tell you 47,000 people in 90 days came to the website to either find out some information or process services. We talked about the OpenGov numbers in terms of how you're taking dollars through citizen services and through those processes. So some of those 47,000 folks were folks who didn't need to come to City Hall to do business, which we're able to facilitate with what we're doing. If we go to the next slide, you'll see sort of our, and I apologize, I'll get you something that's a little more readable, our top sort of services that folks are coming in to look at. Just to give you a quick snapshot, recycling and refuse, 8,400 folks. They're coming there to find out, you know, when the services will be delivered, what the timing is. The police department's 5,200 folks. That could be report a crime. It could find out about a career opportunity. It's a number of options there. The fourth piece there that I'm going to dig in a little bit for this conversation is on careers. So 3,500 individuals in this 90-day period showed up at our website to look at jobs. Of those 3,500 people, 1,100 of them didn't even come in through the front door. They searched for a career, our career that was posted. They came directly to that page to see what it was. So if we drill a little deeper into that, we could think about how they're coming in today. Are they looking for us? Are they coming to us through social media? Are they coming to us because we push some information out there, all facilitated through our department? What you'll find is a lot of individuals just find us through search. Not necessarily all in the city of Scranton. This is an opportunity for us to make sure we're putting our best foot forward and ensuring folks who are looking at this location, if they're coming to school for the first time or seeing about relocating a business, they're finding what they need there. So that's what you're going to see over the organic. I'll spare you some of the other pieces, but it's basically how folks enter. What I want you to see is the next slide, please. When we get into that careers piece, we're looking at those 3,500 people. They landed on the page. As I said, 1,100 went and sort of clicked on that piece, and we click one more. We've talked about the director of DPW, and I know the mention was, we had 2 applications. The reality of this is we had 651 people look at that position in 90 days. So if we take that 651 and we start saying, well, why didn't they go to that next step? What was potentially the issue? And we can kind of start taking some of this data and working through it. But Larry, if we go to the next slide. And on average, they were there for a minute. What you'll see is 220 of those folks were from Scranton. 430 of them were outside city's limits. So we're drawing audience to see our careers. We're drawing audience to see that these opportunities exist. What we need to think about and what we talk about, rather regularly, is how we're bringing in the best candidates and how we're putting those services front forward and how are we able to sort of convert and think about this transactionally. If we were selling blue widgets, the conversation would be, is the price of our blue widget wrong? Is the picture of the blue widget wrong? Are we not describing our blue widget appropriately? We're putting our descriptions out there. We're putting the information there. We're seeing enough people are seeing it, but they're not applying. So it's something that we should be continually to work on. We can amplify that number. The reality is, if we grow the funnel, 700 got us 2, we need 7,000. And we can work through and do that and continue to amplify. But the reality is people are seeing these positions. They're applying for them in some instances, and other instances they're not. But we can handle all this when we start thinking about data and analytics and how the city can look at this, work with it, and build a better mousetrap. So if we go to next slide, we'll talk about the upcoming year. We're looking at 3 major buckets here: security and productivity, data and analytics, and system improvements. I gave you a little depth under each of them. Hardware is a big issue. We've got to replace it. We've got budget this year. We're asking for budget next year. We've got to rip and replace for a number of those systems to get us where we need to be. Enhanced training across the board. The better we prepare our staff to work with these systems, the better our constituents are going to receive service. So as we prepare training, as we deploy solutions to make sure that everybody learns at their own pace, works with the tools that they want and as they will, we'll facilitate that. We need to improve connectivity. When we think about our 20-plus facilities, they're all using bandwidth in unique ways. I say unique because over time, the city has built out its footprint. Strategically, we can make some adjustments, and we're hoping to do it next year, so there's more efficiency, better connectivity, and we see more efficiency internally. So we're taking a strategic look at that. Implement computing standards across the organization. There's some blocking and tackling that we could do better on. We're going to put some additional systems in place, just ensure that we harden the environment. We make sure that folks are able to use their systems as they work or as they'd like to work. Standardization is a big thing there. Upgrade the city network almost wholeheartedly. It needs to be completed next year. You'll see that in some of our capital ask. Data and analytics, we just touched on sort of a practical example of how we could be doing better using that data and going a little further with it. We will improve information sharing across the organization. Thanks to technology, there should be no reason anything siloed. Mitesh touched on consolidating that data. No matter the department, we have an opportunity to really make some strides in how we're sharing information and how it makes us more efficient. We're going to look to take some of this information and make it usable for management to make decisions. It's something that it's there. We have the opportunity to sort of facilitate that we can work through it and do something a little differently and hopefully serve our constituents a little better. Provide information accurately in a timely manner to the constituents. We're focused on the web. We're doing more with social. We have an opportunity to deploy a lot more with email so we can put the information in those individuals' hands. When we have 47,000 people coming to our website in 90 days to say, hey, what's going on, let's put it in their inbox. We're not splitting the atom. It's a very simple task that we can go out and sort of put together for folks. Systems improvements. The camera network, as I said, Eileen's group has supported the police department to win some grants to build that out even further. We're going to do it strategically, not haphazardly. It needs to be done in a way that the city can support in an ongoing way. We're going to redesign the network top to bottom. We're going to enhance performance, but key is enhancing security. We're going to implement additional technologies to ensure that we have a secure workplace. From that standpoint, we have the ability to ensure that folks work with information properly. We can put some systems in place just to facilitate that, keep some guardrails there so that everybody's sort of going in the same direction, and some of that process improvement is something that I would like to tackle as well. When we look at the 2023 budget, thank you. Our professional services is at $835,000. What I want to make sure I'm clear with is this breaks out into buckets that I would not readily attribute to professional services. It doesn't necessarily mean a vendor will be in place. Our dollars associate with maintaining hardware and maintaining software. We have software licensing. Everybody receives an email. There's a Microsoft license associated with it. We have to license our 500 employees. It's about a $135,000 price tag that comes with that. That will come out of our professional services. When we think about the OpenGov renewals, it is a significant investment, what we're looking at that particular piece of software. It will come out of our professional services. When we're thinking about hardware licensing, as I said, each camera that hangs, every network device that lives in one of our buildings, there is a yearly license just to keep it updated in place. Some of those range between $2,000 to $3,000 per item. So we need to ensure that that's not only kept up to date, we would not want it to lapse. Some of what organizations may find is, hey, that's a great cost savings, let's cut some of that licensing fee. The reality is you're left exposed at that point in time and those systems are not updated. The specialist vendors, that will fall under, when we make a call that there's a camera down and we need somebody to go maintain that, it will come out of our professional services. Hardware purchases, something as simple as a laptop, something more complicated as some of the hardware in the squad cars. From that standpoint, it will also come out of our professional services. Our capital projects going into next year, and again, these sort of get boiled up to something that's a little more, I guess, palatable at a high level. I'd love to show you how the pieces all go together, but just to kind of keep it high level. Network security pieces. This is on a hardware side. We need to make a significant investment in removing hardware and updating hardware that should have been done a while ago. So that will harden our environment. It's a significant purchase one time. When we license it, we will be licensing it in 3 to 5 year blocks out of this year's budget. What that does for us is it gives us the ability to reduce the cost, typically by 40%. So we will realize that on an ongoing basis, but we will need to do it 1 year when we bring it in to take advantage of that pricing. Otherwise, we run into some potential issues downfield. Parks facility connectivity. There's some interesting projects out there, and some of them are going to fall into our world. This particular one is a blue phone within the parks. This is a security apparatus. You probably see them on campuses. You may see them in some major metropolitans. We believe it's a worthwhile investment to deploy those in some of the city parks. As a result, that is what we're looking at on that particular line item. The Connected Neighborhoods projects. There is an unbelievable investment that's about to take place nationally in how infrastructure is coming to cities like ours, and how we're able to bridge a lot of that gap between what residents receive in high speed and what they have access to. We've talked about strategically using city facilities like parks and some of the larger facilities that we have access to actually use those as hubs. If you think about hub and spoke, we can make investments in those and bring some greater connectivity into the neighborhoods around it. That's what this project is to look at and sort of build out a little further. Desktop and laptop refresh, I've sort of beat that one. So the other, I'll call it the elephant in the room, we've talked about the telephone system in general. We're operating in a telephone system that to call it an antique is probably generous. It needs to be redone. It's something that we've talked about the projects, and I think previous folks have talked about voice over IP. Everybody sort of sees a commercial for it anymore. The reality is our network infrastructure will not support voice over IP unless we make some of these critical investments to go through and prepare for that type of technology. What we're looking for next year and the year after is to bridge before we're able to get to voice over IP. We, on a daily basis, all love operating our phones because depending on the day, we're dealing with a building with wiring that it is something that we put it in place, it's great, but we've outgrown it. So that at any given time, we're chasing down. My group is supporting it. We do bring in a vendor as needed on that particular one, but it needs to be redone. And that's something that we've identified in the capital project that we just think will better serve our constituents and better serve how we do business on a day-to-day. The last piece that I'll throw in here is the concept of an intranet. This is one that I talked about, sort of decentralization of information and sort of making sure that there's no silos. Internally, we've got a real great team around a lot of critical systems here, but sharing information and sharing it internally. We all send emails back and forth, but the reality of this is when you sit down at your computer in the morning, you'll have your information. You'll see key resources that you can train on. You'll see critical business documents that you may need. There may be some critical documents that you need to work through. It's a basic block and tackle that I'd like to see implemented, and it's something that we'll do in-house. It's a time investment, so from that standpoint, we need to buy some licenses that are associated with it, and then we'll go through and deploy that particular solution. Any questions?
I have a question. So, we work with Granicus.
Correct.
How do we make that searchable?
So Granicus is great because it comes out of my professional services. So it's something that we've delved into. I know we've talked to legal about the ability to actually bridge that a little further. There are a lot of tools that we aren't utilizing today. We will prioritize that even higher. The reality is we can do it with Granicus. We just haven't taken advantage of the configuration there. I'll be totally transparent. As I entered this role, there's some tools that I needed to ramp up on. Granicus was one of them. That wasn't something that I really worked with. But I do know it is possible to make it way more public than it is today, and it is possible to make it searchable. So that's something I'll take away in terms of homework and prioritize a little higher up. And I know I owe the law department a follow-up just to see how they can use it to help support legislation differently and sort of use that system, because we're paying for it. We might as well use it to the utmost.
Well, and I think a point of that or Granicus too, when we got it too, was to start with council and then also to move it on to, boards, commissions.
Yep.
So that gives them some sort of,
Absolutely.
way of using it. But the question is there, like, do you need the city issued hardware to effectively use that, or is
No.
there, right?
As soon as,
Yes.
as soon as you have an account, you can log in, so they can log in from anywhere. We can designate who has access, what their access levels are based on what you sort of let us know. So absolutely, we can extend the reach of that and extend the opportunities to work with it.
Okay.
Don't forget us.
Is there a length to the contract with Granicus?
That particular one I do not have handy,
I
but I can
believe
get
we're
it for
year
you.
to year at the moment. There was an initial 3 to 5 year agreement, but then after that, it's a year-to-year
Okay.
lease or agreement, contract, whatever you want to.
And we've been looking at adding some uniformity to those contracts. We inherited a very large investment and contract with Microsoft. It's something that is not sized right for us, but when it was entered into, it was over 3 years ago, and we're still sort of working through that. November, you'll see our year-to-dates. We pay out a lot. That's just basically how the contracts were set out towards the end of the year. That particular one will pay out our last, and they know that we will renegotiate going forward. Any other questions?
I know there was the parks connectivity piece, but
Correct.
the piece under that, I can't remember what it was titled, but,
Connected neighborhoods.
yeah, the connected,
Yep.
can you explain that a little bit more?
Right. So, again, there's a significant investment not only coming nationally, but the state will be working through it. And what we've identified, we actually, we submitted for what's called middle mile funding. It's $3 million. Part of that middle mile funding is acknowledging we've got fiber in place that's being underutilized or not utilized at all. And since it's not utilized, one of the reasons was it's kind of expensive to put together those last pieces to sort of put it together. The assumption is, as we further leverage the fact that this is an underutilized item, we need to map out where we want to deliver it. So part of that grant, we identified all of our public schools, all of our parks, all of our city locations, and we took that hub and spoke approach. If we can light those particular locations and bring connectivity into the neighborhood, and we're sort of hanging our hat that we get some funding there, this will allow us to fund either items that didn't fit under that if we weren't successful, or at least pilot out. So we can go down to a park, spin up connectivity, have the city facilitate that connectivity out, and depending on the technologies used, we could go 2 blocks, 3 blocks, and really start extending how folks will be able to go through and work with it. We're calling it parks connectivity at that point in time because those we had the most of. We could do this with firehouses, but that's not a great use of space.
So are we talking about using city space to have,
To extend signal, for lack of a better term.
correct, so would we be leasing out our buildings to other companies that are extending the
No, this
signal?
would be something that the
our-
city, the city manages and the city invests in.
And then it would be freely accessed? in the
That's
neighborhood?
probably a little further downfield. We need to work out the pilot. We need to see what's there. It should be done in the nature of free and reduced. There's BEADS funding coming down field, federal again, where there's stipends associated with, $30 a month. You'll be able to pay for high speed. This could potentially facilitate some of that. So it's a space that is not defined, but it's not being approached as a revenue generator, and it's not being approached as something greater than extending connectivity into neighborhoods.
So we would get grant funding for this, we would put this equipment into these areas, and it would just be open.
And basically be lit, yes. If you go in major metropolitan, you'll see a lot of that
And
sort of.
we would maintain it? from
Yes,
there on out?
yep. Very similar to how we maintain those 20 locations today. It's not much different. It's a capital project, so the hope is we start down the path, we see that it works, and we build on it in the future.
I just have one quick one. Would you just be able to just explain the difference between the two capital expenditure lines?
By Chris, you mean Jack?
What's that?
You're asking me?
Yes.
Yeah.
Because there's.
Sorry,
so
I thought you
there's-
said Chris.
So it's just the code of, it's basically 50 and 80, right? Like, that's
Oh,
the
right.
difference
Nope,
in
Matt, go for it.
The map, she's the,
Yeah, under the old system, one of them was capital expenditures, and that was the 550, but the 580 was a maintenance and equipment line. And when the transition came from open government, I guess last year, they changed them all to capital. You'll see the number, the 55.
there's still different account numbers, but it's.
Right.
I just,
The
yeah,
description's
just
the
'cause
same,
you see
different
two
account numbers.
capital expenditures in there, I just
Yeah.
wanted you to clarify
That
that.
happened last year, I guess, when they did the transition with the.
From Finance Plus into Open Gov?
Yep.
Okay. Anyone else have any questions? Okay. We can move on to Kaylee, yes.
Good evening, Council. I really appreciate your time tonight, so I'll get right into it. I'll go back and look at 2022, even though we're not completely over it yet, but in the Human Resources Office, we deal with various responsibilities. We deal with recruitment, onboarding, benefits administration, payroll, biannual audits. This year we did 2 of them. Pension administration, I-9 compliance, OPEB actuary reporting, CBA negotiations, disciplinary matters, grievances, arbitrations, FMLA, short-term and long-term disability, life insurance, and other leaves from work, trainings, and certifications. I do have to acknowledge that last year you approved a confidential assistant in the HR department, and it has made a huge difference. She assists in just about everything because there's just so much to handle. Our workman's compensation coordinator has done a fantastic job. He drastically cut our workman's compensation expense. And I was fortunate enough to work mostly this year with a full staff, which made our office very productive. And I'll get into some of the challenges. So one of the first and probably our biggest challenge is retention of employees. When I first started here on January 11th, I hired, since the beginning of the year, I hired over 60 employees, but we've had 40 leave. And during those exit interviews, the main causes were their salary. So I do need to note that. We also have a little problem recruiting employees, and we have a lot of people interest, but then there's, whether it's the salary or whether it's the waiver, the waiver process from working out, from living outside the city and coming in, it's just been a real struggle. And then, of course, streamlining all the current healthcare plans. Our dental, health, vision, and pharmacy benefits are all separate entities, and we have different groups for each of the bargaining units. We have different groups for the retirees, depending on when they retired, with what contract. So it's a lot to manage, but Willis Towers, Watson has been wonderful with helping us to make that better. Larry?
Can you explain the dynamic of Willis Towers Watson and the HR department?
Sure. We basically deal with them daily. And I was going to get into this as part of our accomplishments. Like, for instance, we're conducting a healthcare dependent audit right now. And what that is we're looking at all of the active employees along with the retirees before the age of 65 to make sure that everyone that is on the insurance should be on the insurance. And if they aren't, then they're going to be taken off. We've had quite a few already voluntarily. When they realized the criteria, we had quite a few come off voluntarily. And then if they aren't eligible for coverage, that will be rescinded. When they help us with everything. When there's a question about a claim or a claim not being paid, just everything, big scale to small scale.
Bless.
They've been a huge, huge asset to us. Let's see. We've assisted with the DPW union negotiation. We formalized the employee disciplinary proceedings, which we now have a system in place when an employee has to be disciplined. It's the same across the board. We have a blanket approach. We have a system that we follow from beginning to end. And like I mentioned before, we also implemented NeoGov for onboarding, which is basically online software where new employees can fill out all the forms, things like that online. And our workman's compensation claims have drastically decreased. Larry? And here's some of the numbers. Oh, wait, did I? Yeah, okay. So here's some of the numbers. If you look at the lost time, it has significantly decreased over the last 7 years with people being out of work. Thank you. And when you look at the human resources budget, we were able to decrease for 2023 about $200,000, and the biggest savings comes from the healthcare cost for the non-union health insurance. Non-union employees follow the same health insurance as the clerical union does, and between that and we're self-insured, so it's claims-based. We've just really saved a lot of money there. I know there's other categories there. If you have questions about them, I'd be glad to answer them.
I have, could you just explain what professional services are covered under your budget?
Sure. So professional services is our labor council, Willis Tower Watson, a lot of the experts that we deal with union negotiations and arbitrations, our PA group administrator, Concord, which does our drug testing, Regional Hospital, Northeast Rehab, let's see, Medicus, which they do a lot of the physicals for employees, Moses Taylor Hospital. That's to name the most frequently used ones.
Okay. In terms of other salary, because, I think we had 110 budgeted last year, but it was year-to-date, at least through the end of August, was 0. But that still went up to 135 from 110.
Okay, so other salaries, that would comprise any employee that leaves that may have money owed to them to be paid out. It would also cover any interns that we might bring in. So, we did, let's see, year-to-date 2022. Is that correct, that number?
Year-to-date, yes.
Yeah, okay. So it's at 0 right now, but in the past, and I suspect next year, we're going to be having interns as well.
Kaylee, the casualty, liability and casualty insurance, that increased $540,000?
Yes, so with this policy, with these policies, they run from April to April. So to try to get the underwriters to give me some kind of number to help project what the cost would be, they weren't able to do that. So they said that a safe number would be to add 10%. They're seeing that as an industry standard for next year.
Okay, we also added, we had 3 buildings for flood insurance that was not prior to. So we had 3 buildings that prior to this year did not have flood insurance on them. So we did add them to the liability policy as well. So there's an increased cost for that. So that was not there last year. That will be there next year. We paid the difference for this year, but it was prorated for the remainder part of the year, but it's a full for next year.
I was going to say, because 10% would only be $140,000.
No, there's also, there's 3 buildings that have flood insurance. Sorry.
That's all right, thank you.
And then if you
How many interns do we have?
Right now, I'm not exactly sure. I know that throughout the year, there's been 4 of them, but I don't know how many we have currently. Do you, Jess? 2? Mm-hmm.
2? Is that what you said?
I think they need a mic when you're speaking, I'm sorry.
Two.
Okay, so moving on to salaries. I am asking for a modest increase for the employees. The biggest one that you'll notice is the workman's compensation risk manager position. This is a very important position. They manage everything to do with workman's comp, follow-up. You know, I think Chief Judge mentioned the other night that he's down to having 1 person out. So it more than pays for itself, and it really is a specialty, a niche. So if we can get somebody, we recently lost our workman's comp manager to the county for more money. So that's what stands out in the salary detail to me that I wanted to share with
When you
you.
look at that one, last year it was increased 18%, and this year it's another 20.
Yes.
It's a 25.
But if you look at the savings that we've, like with being so diligent with the workman's comp, you know, and I can share the numbers with you as well if you'd like to see them, but the numbers they just speak for themselves with the job that's being done.
Now, the first thing I heard you say, I missed it, but you said when you were hired in the first year, you hired 60 employees and 40 had left?
Yes. Mhm. Not all the same 60 people that I hired, but, you know.
Oh, 40 people left the city while 60
Exactly.
employees came in? Okay.
Exactly. So it was exciting for me to bring all these people in, but then on the other hand, it's like, oh, we're losing them. You know, so if there's some way we can retain them, it would be great.
Do you know how many were through retirements?
Pardon me?
Do you know how many were through retirements?
Those numbers aren't through retirement. I didn't count that in.
Any other reasons aside from salary?
That was really the biggest one. Of course, there were people that had personal reasons, you know, just wasn't a right fit for them. They're, you know, talking to some of these people during their exit interviews, they did not all state salary, but I can tell you that probably 80% of them did.
Are there any additional changes that you would recommend to increase the retention of employees aside from just salary?
Well, I think, you know, when you look at some of, like, the standard salary, let me just see here. For this region, let me see, is $53,000. And if you look at a lot of our employees, the average is in the 40s. And then on top of that, if you work in City Hall, they have to pay for their parking. And that can cost them anywhere between $65 and $95 a month. You know, they have, some of them in the union, they have union dues, things like that that come out of their pay already. So, you know, perhaps an increase in salary, I think, would be extremely helpful. I think paying for parking would be an incentive. So they're the two things that stand out most in my mind.
In terms of, sorry, go ahead.
Have we estimated, like, how much that would be on the city to pay for parking rather than the employees?
I
Do we
could
have
get
an
those
idea of a
numbers
number
for you,
that?
yes. I could get those numbers for you.
Okay, I'd just be interested in
yep,
seeing that. Thank you.
In terms of the workers' compensation, so we don't have year-to-date numbers. That's normally paid out at the end of the year. Do we know what our workers' compensation number is going to be this year?
For 2023?
For 2022?
What do you mean, the total amount
Yeah.
paid?
Well, yeah, this is where,
Yeah.
this is how drastically, like, when you look at 2021, it was $2.3 million, and it's projected to be this year, it'll probably be a little higher than this, because the claims come in, you know, afterwards, but it's $298,000. So it has significantly dropped. Right?
Yeah, in 2015 on Kaylee's sheet here, it was 4.8 million, you know, and like she said, last year it was 2.3, so that shows the progression in the workman's comp and the work that's been done. Again, a lot of that's been...
And that doesn't take out what the city had to prepay that we got back in terms of the workers'
No.
comp, right? Because I know the improvements we made to the workers' comp was what resulted in that $6 million being returned from L&I, right?
Yeah, and I have the history of being here way back when this was really bad in the city of Scranton, back in the 2000s, and that's when I was with the Commonwealth and working with labor and industry, and it was not a very pleasant situation. To see where it is today from where it was 15 years ago, it's a very significant improvement, and a lot of that has to do a lot of hard work, a lot of people in HR throughout the years upstairs. Safety programs, everything, yeah, it's been very good.
I just want to add as well, having been intimately involved in managing some of these claims as well, and in oversight, I think Councilman Schuster, you asked about the increase in salary to the workers' compensation coordinator position. You noted that it seems significantly high. I believe that's slated for $65,000. I can tell you in the first month or so that Jack Judge came on with us, he found 3 claims that were subject to subrogation that we never pursued. And we drove down to Harrisburg in one afternoon and we had a check for $250,000. So it's a position that pays for itself, hand over fist, time and time again. The drop in claims, the release from the Labor and Industry Department from our reserve account, I mean, it's I think, one of the most sound investments you can make. It's a position that will sustain us for quite some time, pay for itself several years in advance.
And that's currently an open position, you said, right?
It's currently an open position. The individual who is filling that has now moved over to the county for an increased salary.
Okay, that's what I thought you said, thank you.
So who's doing that work? Why, Willis Towers or labor?
No,
centers?
they are not. They are a healthcare TPA, workers' compensation. We do have TPA, which is PMA. However, they don't do the day-to-day that we do. So now that duty falls to the people at this table when we can, as best as we can, given the short staffing that we all, you know, are subject to. Some of the reforms that we put in place that have generated the return of in excess of $8 million from our reserve account is largely due to increased claims oversight, denying heart and lung claims when they really should be workers' compensation, which generates savings. We've increased our arbitration panels on heart and lung so that they're not held once a year, they're held every other month. It's that kind of due diligence that you need someone in and day out monitoring to make sure that we keep that savings in place, that we're not overspending on workers' comp claims, that they're going out of hand and they're not being watched.
We do have a consultant, is it C3 that was a consultant on there? They do provide some consultation to us in the workers' compensation space. We had just met with them, I think maybe 2 weeks ago. I kind of lose track of time here. As you can see, there's a lot that goes on behind the scenes, but within the last couple of weeks, we've met with them. They did offer that if we do need someone to bridge, they would offer someone. But you can see it's a vital component to the human resources space and to the city overall. And they've done a great job, and I don't mean to cut you off. I just want to say there is a potential, Mr. McAndrew, to have a third party, but again, it's a consulting, and we have to do we have to get a contract with them.
And just one last thing, I just can't stress enough that, one of the things that Judge imparted on me before he left was that this very easily can get out of control. It's something that has to really, truly be managed and kept up on, every single day. So. Okay, so our goals for 2023, I know that it's important to council and the administration to be able to perform performance reviews. Unfortunately, in the Human Resources Department, I don't have the bandwidth to do that, but I am working on a plan to have the managers do it with their employees in their group, along with their job description. We'd have to figure out all the details, but I am working on it, and I'm hoping to initiate that in 2023.
Just a note on that, so there are certain platforms that you could use where it's
Yes.
built in and goals for each year, so are you looking into what those different platforms could be, or you might have something to bring to us
Yes.
in the future
And
for
I'll come back.
contracts?
Once I get a plan, I'd be glad to come back and when I have the specifics for you.
So I'm unfamiliar with your payroll system, but is there a piece of our payroll system that has a platform such as that to do performance reviews on that? Or to do
I'm not
employee
really sure, to be
evaluations?
honest with you. I'm not sure, but I can certainly check into that as well. But it is a priority, so it will be done in 2023.
Before they don't offer it.
Say that again?
They don't offer it. It's a local company that we utilize for payroll.
Gotcha. I know some of those systems do. I saw you perk up when I said it. So.
And
A
then
lot of
what-
those systems would have that evaluation process embedded in the system.
It's an option.
And then what line item would that come from in the budget? Would that
For
be
the
under,
performance reviews would probably be,
That's internal.
be a professional
Yeah, I don't think-
service? under-
Yeah, I don't think that's a
Yeah.
third, that's internal.
that wouldn't be. a
That would be
third
staff.
party. Yeah, that will just be part of, the manager's job,
Okay.
is to stay on top of their employees and.
No, but
that.
I mean, if there had to be a contract with a certain platform to use for the performance reviews.
That'd be professional.
Yeah.
Professional, okay.
I got you.
Thank you.
Well, I like to jump in. I'm thrilled to see that this is one of your goals, because I've been asking for this for 3 years. And I've also been asking for number 2 for 3 years, so I'm glad to see that is another goal for this year.
Well, and that project has actually started. We've had several meetings. It's a bigger undertaking than one would think, because there's so much updating to all of the policies and the way things are today. But yes, it's very much overdue, so. And then I'd also like to implement employee training days for current and future employees, which would be once a month, getting our new employees and catching up with our employees that have been here, sitting down for a session, going through, having a day of going through all of the policies and procedures for the city. If the new employee has any questions, they can ask questions. Also, to protect the city, sign off that they've been educated on sexual harassment or diversity or whatever it may be. So I'm really looking forward to implementing that. And we're working hard to create an equitable work environment and successfully bargaining the contracts. We have STO, which hopefully will be negotiated and settled by the end of this year, but if not, we'll be going into next year with that. And also, the end of 2023, we'll be getting ready to start with the clerical union contract again.
I did have a question with regards to new employees. So on the council side of things, I've been interested in working on streamlining our workflow for when we do have new council members come on, like an onboarding process that our clerk's office would go through with them. And, that's even more relevant since we'll have a vacancy soon enough and a new council member here. I know that in the past, one of the few things that we've had to do with HR in that process is just the payroll for that, setting up the payroll for that new council member. So I'm wondering, from your side of things, if there's anything else we need to think of, or how that process would go best, if that's for Mr. Voldenberg to connect the new member with you or with the payroll specialist.
That is one part of the onboarding that is pretty easy, basically. So, once that happens, we'll just get the information, connect with Mr. Voldenberg, and we'll have him or her come up to HR and fill out the needed paperwork, and it's pretty seamless.
Okay, wonderful, thanks.
Any other questions we have? I'm just going to, before I hand it down to Jessica, I'd be remiss if I didn't point out, as we transition from the BA over to law, I think the 5 other individuals up here other than myself, the work that goes on behind the scenes, both the BA department, the Human Resources, IT, Treasury, and the law, they're sometimes lost in city government and the work that actually gets done. Before, we talk about Jess and her budget, but you just see the work that happens behind the scenes for all 500 plus employees. There's a lot of things that happen behind the scenes as it relates to protecting the city liability, insurance coverage, employee benefits, information technology sharing, protecting cybersecurity, even Treasury, and letting folks find better ways to pay and make their business happen here in the city. So I personally, I can tell you before I go any further, I'm privileged to work with a group of professionals and individuals that do the work that's been done here. I think it's pretty evident tonight on their presentations, the hard work that goes on. I know we probably don't do this enough, but there is enough work out there. I say it all the time, there's no shortage of work here in the city, and I mean that, but that's a testament to the work that they've all done here. You see the work that happens here every day. So I just want to point that out before I turn it over to Jessica. We talk a little bit about law here, so thanks for that 2 minutes.
All right. Good evening. So I'll start by walking you through some of the accomplishments, the things we've achieved in the law department so far for 2022. We've prepared over 200 pieces of legislation. I think that's more than any other municipality processes. We also provide intense legal oversight and advice on a number of financial matters, including the payroll prep tax conversion. We participate in the annual credit rating review with S&P for the city of Scranton. We were very hands-on in crafting the debt policy, in creating the OPEB trust that's before you all now, and in the budget process as well. We have also, when we have had the capacity and the time, volunteered to participate in representing the city in various labor matters, in an effort to curb some of our labor council costs and allow them to focus on what they do best, which is contract negotiations. At present, over the past year, we've had over 39 active lawsuits, approximately, and we've resolved a quarter of those. We've negotiated decreased parking rates for the residents and visitors of the city of Scranton, and we've helped craft policy changes for housing reform. We've pursued over 50 million delinquent, or not 50 million, that would be exhausting, 50 business privilege and mercantile delinquent accounts that are due and owing to the city, and we hope to increase that number further. And we've assisted with demolitions, the pursuit of grants, and we provide routine legal advice and procurement guidance for every city department. That said, despite all those accomplishments, we do still have existing challenges here. We need to be able to attract and keep qualified, experienced legal counsel. So far, I've had turnover with 3 assistant solicitor positions this year alone. We additionally still have approximately 30 active lawsuits pending before the city. Those range from anywhere from a slip and fall that is minor in nature to multi-million-dollar class actions. We also still have a huge backlog of delinquent business privilege and mercantile accounts that we could be pursuing with sufficient resources. Kathy Wexler, our tax collector from the Single Tax Office, has indicated to me that of the accounts they've identified, there are between 400 and 500 accounts that we could be pursuing legally. That's money on the table that we have yet to collect. So our goals heading into 2023 are obviously to continue to provide the high-quality prospective legal advice that we've been providing, so that we're not paying for that on the back end through court awards and judgments as a result of litigation. As I said earlier, we also want to increase business privilege and mercantile tax collections. I think we could do a lot more in that space, and with sufficient staffing, the more attorney manpower we have, the more we can go after these businesses and increase the city's overall revenue. We also want to continue facilitating labor matters where possible. This helps us save funds that we would otherwise have to spend on expensive labor counsel. Although they're extremely qualified and knowledgeable, I think we should give them as much time and space possible to do the heavy lifting of contract negotiations. And we can handle some of the more minor, mundane disciplinary matters in-house. So as you can see, our employee compensation as of the end of August was just over half of our overall salary budget. This is likely attributed to the turnover we've experienced and some vacancies in positions. I've proposed some changes to the staffing in the law department, again, to increase our capacity to further insulate the city from liability, increased expenditures on litigation costs, and also to increase revenues. In addition to some of the salary increases that were proposed, we also have combined 2 assistant solicitor positions into one. That takes 2 separate salary line items that were totaling $90,000 and converts that into a full-time position at $77,500. This would allow someone to be in-house more consistently. The positions we have currently for litigation and legislation especially require a lot of hands-on involvement, day-to-day, in and out. You need to be there for policy meetings. You need to meet with department heads. You need to chase down discovery responses. And having one full-time person that I don't need to compete with their private practice, I think would be an immense benefit to the city overall. Additionally, I would like to increase the part-time assistant solicitor dedicated to tax matters to a full-time job. As I said, this position would pay for itself hand over fist, given how many delinquent business privilege and mercantile accounts remain active and uncollected at the moment. I also want to state that our professional services, as a result of the staffing changes we realized last year, have decreased dramatically. So as of the end of August, we only spent $87,000 of our $500,000 that was allocated for 2022. Because of the investments we made in in-house staff, we don't have to pay outside attorneys exorbitant hourly rates to do the legal work. We're able to do them in-house at a much lower rate. We still, I do want to also point out, however, the number does remain significant as it's budgeted for next year at $350,000. We still have a number of big-ticket lawsuits that we are defending, one of those being the refuse class action that's scheduled for trial. We also have a pending COLA litigation, so the police retirees have sued the city seeking reinstatement of their cost of living adjustments for their pensions, and we have another class action that is very active at the moment.
So we're using specialized counsel to support those lawsuits?
So we have insurance defense counsel in place for the class action with Northeast Revenue Services. We do have class action counsel, so a firm that specializes in class actions that is representing us in the refuse matter.
Where do you anticipate the professional services to end up by the end of December? From that original $500,000 that was budgeted, there was $87,000 at the end of August.
I think that largely depends. So we still have, as I said, we have a very active class action at the moment with Northeast Revenue Services, and we will be doing intensive prep with the Refuse Class Action Council over the coming months in anticipation for trial.
In light of those huge class action lawsuits that are coming up, do you think that $350,000 is an appropriate number?
I do.
You do, okay.
They're at 149,290 year-to-date, so just shy of 150,000.
Thank you.
So to recap, I just want to say that last year I came before you all and made the case that we need to invest in attracting and retaining qualified professionals for the city to succeed. I made the argument that slashing a few grand here and there in salaries and positions was short-sighted and would set us up for increased costs in other ways. So to those who supported the personnel changes on council last year, I thank you. I hope that I've done right by you and shown that that model does work. It is effective. So as proposed in the 2023 Law Department budget, we actually were able to reduce the strain on taxpayers overall by $91,000. That even includes the salary adjustments and the expansion of positions. With more proactive legal involvement on the front end, we rely less on outside counsel to defend the city on the back end at a high hourly rate. Not reflected in the budget at all is also the impact of dollars the law department was able to bring in. Just to name a few, we brought in significant delinquent business privilege and mercantile collections so far. We've assisted in the delinquent refuse collections as well, and we recovered a demolition lien after pursuing it that was in excess of $400,000. We also saved money by resolving a quarter of the lawsuits that were actively pending against the city when the year started. So if anything, I hope this budget demonstrates to you how strategic investment in key positions results in more efficient operations at a reduced cost, lessening the burden on taxpayers without sacrificing service.
Thank you. Does anyone else have any last questions?
Yeah, so with that being said, last year we did add the tax solicitor. And this year you're looking to make that a full-time position. Have we reached out to I know the school district could use maybe some of these services. Have we reached out to them to maybe split the cost on something like this with shared services?
So I've had some conversations with Pat Laffey. We've explored the idea of shared services. At the moment, they've done, I think, their legal counsel has done a phenomenal job on following up on and monitoring reassessment cases, providing representation in that. I believe we can share the duties there. Our interests are aligned, so I think one legal counsel representing both entities at those assessment appeal hearings is really efficient, and then having us spearhead the delinquent business privilege and mercantile collections is, I think, the way to go. So it's really a division of duties and not dollars.
Okay, is there new counsel working just as well as the past counsel? Because I know the past counsel was really going after those tax
They were really
appeals.
great. We do have Joe O'Brien attending those assessment appeal hearings now. I believe the school district remains an active participant. And so I would absolutely, my plan and approach for 2023 is to share those duties.
So it's 91,000 in savings. You must have had a good principal in school.
I did.
Any other questions?
Council, any other questions of us?
Does anyone else have any questions?
If you'll indulge us just for 5 more minutes, if you will. I know it's been a late night. I know we've covered a lot of bases here, but if you'll indulge us just for 5 more minutes, I think I'd be remiss again if I don't reiterate really what's gone on here the last couple of weeks as we have presented this budget. I know that felt a little different than it did last year, so I do appreciate your attention to this. If we can, just for a moment, I'd like to just kind of wrap some things up of everything we've kind of talked about here over the last couple of weeks, and I want to start with Jess, if you want to offer your comments on some of the things we talked about.
Sure. So, as you all know, I've been here with the city for several years. I've seen the city through a lot of difficult times. I was particularly excited about this budget. This is the first full budget cycle we're seeing for the city of Scranton out of Act 47 and on the other side of normalizing post-pandemic. As you've seen, the city's finances are in much better shape than they were just a few short years ago. I remember when the city would stop paying bills partway through the year and when our pension fund was on the brink of disaster. Our credit rating was not so great. So I think to say that we're ending this year with a projected surplus, our credit rating the highest it's been in decades, that our pension fund is no longer in immediate peril. We have a fund balance, investment, and debt policies so that the mistakes that we've made in the past aren't going to haunt us in the future. We have strong and stable revenues, and we are closely, ever so, scrupulously monitoring our expenditures so that overspending doesn't happen. That said, I can absolutely say that there is still work to be done here. The mismanagement of the city over the past several decades cannot be repeated. Some of those systemic issues obviously persist, and we are working very hard day in and day out to clean them. We are not going back to distress status. The mayor has received an overwhelming call for her vision to clean up these systemic issues and move the city forward, and this budget identifies the resources she needs to get that done for the people of Scranton as they've supported her.
Thanks, Jess. Mac, do you want to make some comments?
Sure. Well, most of you know me. I've been here for a long time. I predate Jessica in the city of Scranton. I started with DCD up here in 2005, working with the state-appointed Act 47 coordinator, which was the Pennsylvania Economy League. They were under our rubric under DCED. I worked there for almost 10 years, and then I ended up working for the coordinator from 2016 to 2021. To say I have a long history and an involved history in the city is an understatement, and I've seen, as Jessica mentioned, the worst days that this city has seen in the last 15 years, down to the point where in July of 2020, when Mayor Doherty actually made the decision to cut wages to minimum wage because there was no money in July to make payroll. Terrible, but I want to concentrate more on the recommendation that has been PEL's recommendation when I was with PEL, even predates PEL. I remember Jerry Cross sitting here in 2006 petitioning council to make tax increases to get them out of the deficit, and he was at that time saying over 100%, and everybody was poo-pooing him and everything, but the next year they did make a 26% tax increase, but it ended up by 2012 that it was not enough. But the issue is really in the city, and you've heard it, the structural deficit created by the assessed valuations and the stagnation in there and actual decline. Just some numbers here. This goes back to 1992. 1992 was the year that the city entered Act 47. Assessed value, $387,036,616. Now it's $387 million. 2022 assessed value, $377,998,886. So over 30 years, the assessed value decreased by $9 million. That's what's the practical problem with that? Year to year, when an assessed value decreases and your millage stays what it is, 10 mils, 20 mils, whatever it is, the next year you're bringing in less revenue. That's your inherent structural deficit. That's what's been, I guess you would say, the noose around the city of Scranton for the past 30 years, probably longer than that. I just gave it for 30 years, but I think that the basis for property tax in Pennsylvania started in the late 19th century, really throughout the whole history of the country, but in the late 19th century and up in the city of Scranton, probably till the mid-20th century. Picture the city of Scranton when it was first founded. Trees, forest. And at that time, for the coal boom, everybody picked it up. You had building going on in this city. Neighborhoods. I always say to myself, I'm born and raised in the city of Scranton. You know, Mercy Hospital, I got my first spank. But I always say I would love to have been in the city of Scranton in like 1890, 1900, and walk into school. And I bet you in all these neighborhoods, all you heard was hammers, buildings going up, construction. These neighborhoods that we all live in now were being created. But that increased assessed value for decades, probably up until about 1950, when the city kind of is built out. There's no more room for really residential. There's no more room for industrial or commercial growth. So when I say before 30 years, I probably, in my mind, probably be like 1950, 1960 is when this stagnation and decline has happened. So the city has been dealing with that, pushed them probably into 47, one of the factors, and it's been a noose around the neck of the city since that time. But the next question I always bring up is, what did the city do in the last 30 years to really address this issue, okay? So you're losing money every year keeping your millage the same. You don't raise your taxes, you see your revenue going down in real estate tax revenue. So 1992 to 1998, remember the city has 2 tax millages, land and improvement, 0 tax increase, okay? 1999, 5% increase on land, 25% increase on improvements. 2000, a year later, 19% increase, tax increase on both land and improvement. So in 2 years, you had a 24% increase on your land, you had a 44 taxpayer increase on your improvements, okay? 7 years, no action. Let's pick up 2001 to 2006, 6 years, 0 tax increases. As I mentioned before, 2007 was a 26%, double digits, again, tax increases. 2008, 2010, tax increases, 0. 2011, tax cut, 11%, okay? So you had 3 years of 0, and then it was reduced in 2011 by 11%. 2012, 5% increase. Now, 2012 was the turning point when the city ran out of money. I mentioned before about the July going to 2012, the city at that time did $40 million of unfunded debt borrowing, which is really the size of the deficit at that time, to make things better, okay? So when unfunded debt borrowing is you have to go to court, you have to petition, it has to be, you have to show a reason why your tax revenues aren't where they're at or your expenditure is increased. You make a petition to the court, they have to approve your borrowing, and they approve at that time your millage increase, because the court, that has to be in a court order to make sure the municipality complies, because then if they don't, then they can go and say that they're not in compliance with the court order. So the unfunded borrowing, $40 million, okay? So that was in 2012, 5% tax increase. 2013, 22% increase in both land and improvement. 2014, 57% tax increase, land and improvement. 2015, 19% tax increase on both land and improvements. 2016, 6% on both. So from 2012 to 2016, city raised property taxes 109%. 109%, okay? So here we are today, 2017. Let's go back to 2017. 2017 to 2022, as was mentioned at this table, there's been 0 tax increases outside of the one in 2019, which was just on land, I believe, at 2.4%. So here we are again, 2017 to 2022, 0 tax increases. There's a pattern here, as you can see. Lack of tax increases, boom, double digits. You're into tax increases. Why weren't taxes increased in those years when there were zeros? There's many arguments, many things that happened. One was sale of assets. Sale of the golf course, bailed out the city in the 2000s. Leasebacks, so the city receives a stream of revenue coming from the Redevelopment Authority or the Scranton Parking Authority. Unfunded borrowing was another one. So the city would be able to paper over these what I call them, the fallacies of one-time revenues that would stitch you through a tax increase, but the monster keeps growing because your assessed value, eventually the one-time revenues stop, that assessed value keeps getting bigger and bigger, and your tax increase has to become bigger to make up that deficit. So, why 3% now? As I mentioned before, that was always been a PEL policy, just to maintain this. And small tax increases, they do build from year to year. You know, you make a 3% now, you're addressing that issue. It was mentioned $587,000 in revenue just from 2019 assessed value to today. Like I mentioned, historically, the droughts and tax increases lead to larger increases. Taxpayers, I know I'm a taxpayer, that's not what I want. And the fallacy of the one time is one thing that we want to avoid. But I think Jessica mentioned it about the bad habits. You know, this is an opportunity. The city was distressed for these 30 years. We have an opportunity to break those bad habits. One-time revenues, not increasing, not maintaining tax increases over time to create a sustainable city fiscal government. That's a sign to taxpayers that of responsibility. That's a sign to investors. You know, one of the things that just in the most recent report from S&P was the one-time revenue from ARPA. And that was one thing they're watching. Could the city sustain themselves without one-time revenue? They don't like that. You know, so this year, we decreased it to 2.5, showed a weaning off. Next year, hopefully it'll be 0. But at the same time, we're showing people that we know what the demon is in the fiscal part of the city of Scranton, that's the assessed values. And we have to address that just to maintain the services that we have. And, you know, I've lived in this city my whole life, 57 years. So remember, my eyes were getting bad. But where the city is at today, you know, I love the city. You know, I drank Leggett's Creek when I was a kid. You know, that's why I look so youthful today, I always say, because I was in that water so many times, you know. But it's just that there's so much where the city is today where instead of, you've heard it, we've all heard it, the sobriquet of, Scranton, you know, like distressed city or what it is. We're on the verge now, we can erase that going into the future. You know, let's look for the next 10, 20, 30 years where instead of looking back on Scranton as that distressed city where they were back in I remember in the 60s and 70s when they were closing up all the shops or the stores downtown, were all boarded up. The hotel was boarded up. Everything was boarded up in this city. It was a gray city. I remember a gray downtown when I was a kid in the 70s. You know, it's not like that now. It hasn't been like that. We have to maintain that in the city and build upon it. You know, and I think we have to take this city and put it into the 21st century and maintain it. You know, one of the parts that happened too in 2012, really it's 2010, I think, 2010 and 2011. 2010 was the salary cuts. Boom, across the board, part of the political fight that was going on at the time. I think 2011 was staff reductions. That was the next one. But I think much of what's going on today, too, is still a hangover from that part. You know, let's get the city to a point where this is not a perennial issue going on, whether it's the assessed values, what people are getting paid. And I know, I can tell you, you know, I worked on the outside of the city. I was here for 15, 16 years on the other side of the table. But being in, working day to day here, I see a different side. How hard people in this city work. The nonstop calls, trying to get work done. Boom, email, boom, a phone call. You know, like just to try and get things done is really a task. You know, and the people work really hard in this city. I will say that, and that's what's impressed me the most in my, 7 months since I've been. You know, I am an independent contractor, but I do come here every day because, as Larry tells me, you don't have to be here every day. I said, but you know what? I want to be in touch with everybody who works here and what the issues that are going on. So I know, because I want to know what's going on. I've known the history here. I've been here a long time, and I've seen the good, I've seen the bad. You know, we were the bad guys, we were the good guys, you know. But at the same time, the past is the past. How do we keep the city going strong into the future, where people want to come and live as they are now? They're moving here, and businesses, new businesses, we have a new technology. We're making a transition here from the old commercial factories that were closed up in the city to more dynamic, technological and new startup businesses. And I think that, you know, the 3% is probably, as Jessica mentioned, it pays off more than what you would realize in the end, because you don't want to be and then raising this in double figures as has been, as I mentioned, in the past of the city. So let's break that record.
Thank you, Mr. Domines. I'm going to say something too, and I'm going to start off with, you know, go through some of the points that you made and that have been made here tonight. I'm going to start off with bad habits. I said this last year. I'm going to say it again this year. I was at the school district. I went through the budget process at the school district, and there is a difference between the two. We were trying to get out of a hole over there, and I got there in a time when we were already in that hole, and I was trying to dig out of that hole. Right now, we're at a different point with the city, and I don't want to see us get to that hole. So when I'm looking at expenditure increases, I'm always going back to that. So I always have that in mind. I promise you guys, I'm looking at this budget. I'm going to look at it long and hard. I've been looking at it since the day I got it. I will say I think council did a good job with the amendments we made in the last couple of years, and some of those amendments that we made have scaled back some of those expenditures, and I think you'd have to agree. I'd have to agree with those incremental tax expenditures too, and I'm going to say something, and I'm sure nobody here is going to like it. Pell recommended tax increases, and this one is smaller than what was recommended, but did they recommend adding $1 million of increases and new positions into the budget? And that's something that I'm going to look at going forward, see what I think is needed, in my opinion, and go from there.
If I could reply to that, one of the reasons why when I was with the state and with Pell, the city didn't have money to do that. You know, that's one of the reasons why that sobriquet, as I mentioned before, is the city of Scranton's, where it's, it was always a negative one. But you couldn't do that because there wasn't money to anything. The city was, there was no money. You know, now, this is trying to make up for the things that happened in the past, just put the city on a path now, so and I understand about the expenditure increases.
And that's just where I'm giving
Yeah.
you where I'm coming from.
But again, I think to stay competitive, though, and to be marketable, you heard it tonight, you've heard it throughout, even with the other presentations with Chief Judge, and, getting people to, it's not just being competitive in the market, but the residency restriction is another one that really limits your pool. So you got to figure out how do you compensate for that residency requirement to get people in the city to want to work here. I think in that's been something that, how do we address that? I'm sorry.
Yeah, and I think that's the balance that council's going to have to make. We're going to have to take those things.
I think, to use your phrase, an unpopular opinion, employment in the city of Scranton is a stepping stone. So you can decide to keep it a stepping stone, or we can invest to keep these people here long-term. We think about institutional knowledge. At these turns, we have no institutional knowledge. I'm working with a department that the longest tenured person beyond me is 9 months. That's ridiculous. So when you invest, you're investing for that institutional knowledge. We won't become a stepping stone. We have to be cheerleaders to get folks to sign on. My most recent hire is a transplant from Harlem. Loves the city, went to school at the U. Can't beat it. How do I keep him 2 to 3 years? Because we're teaching him how to do this job for twice as much somewhere else. So that's the struggle with this, and watching as an outsider before participating, a reality here is we have a workforce that does a lot, but is also learning. We need to keep them excited. We need to keep them engaged. The administration has done the best they can. There's a dollars and cents piece of it. And that's what I would love to see get addressed. Let's not be a stepping stone.
Yeah, and I think, like I said, I think that's the balance that council's going to have to make, looking at these positions and making these decisions.
If I can, I'm not sure about the $1 million. I think that's a bit of a stretch, but it's not $1 million in new jobs, but we'll go.
1.3 was the increase, right?
Okay. So
That's in the salary line item.
that's a salary line across the board. It's not new positions. So you might want to go back and take a look. It's not, we won't get into it, but that's total salary, that's increases, it's everything, so it's standard salary. But I digress. So let me just close out here. I do appreciate your time. You've heard a lot of information here tonight. You all asked a lot of great questions, and I do appreciate it. So let me just wrap this up with, I understand some of you had some initial reactions when you first learned to propose salary increases and some new positions that were laid out in this budget, and I do get it. I understand. And to your point, I know you've been around a lot of budgets. I've been around a lot of government myself. I do get it. I understand it. I appreciate your diligence in making sure that the taxpayer funds are managed responsibly. We, too, were very deliberative and careful in identifying those positions that we were going to invest in. But if we don't invest in the people doing the work, we will set ourselves up for failure. An overwhelming majority of Scranton citizens support the mayor and her vision to move City Hall forward and not repeat those mistakes of the past that Matt just articulated. The people of the city call for change, and we're doing just that. The mayor has identified some resources needed to make some of those changes happen in this budget. We as a city have invested significant resources in infrastructure, facilities, and equipment. And that same investment needs to be made in our human capital. Hardworking public servants and professionals are a sound strategic investment, and we should be thinking that way. Take, for example, the investments we made in personnel in the Human Resources Department and in our law departments. You heard both of them speak here tonight about the progress we've made in both of them. Attracting and retaining professionals has led to an increase in cost savings, increase in revenue to the city, and the positions have essentially paid for themselves. Our current salaries still reflect a financially struggling, distressed city. That's not the city we are striving so hard every single day to evolve into. And we're losing good people to other jobs, and we're not able to fill those positions because of salaries. This year we've had the position of DPW director open since the spring. I could tell you it's been since April 17th. And we've experienced turnover in other positions, the finance manager, the workers' compensation program manager, several assistant solicitors, treasurer, project manager, parks director, human resources director, housing inspectors, and other staff at large throughout the city we've replaced. Kaylee mentioned 60 people she's hired. The city, having that kind of staff turnover, it stunts the city in our progress. It slows us down. While we may save a few dollars in trying to cut salaries, when we lose experienced qualified staff, recruitment and retention becomes paramount to making sure qualified staff remains intact to manage a city of 80,000 residents. You just heard Jack say that. Eventually, we will end up experiencing increased costs in other ways. So it's no wonder why we lose good staff. And just look at the comparables that are in your packet to other cities, other peer cities, and our school district. We have positions that are underfunded by 29, 38, 55, and even as much as 98% underfunded. So we either need to grow the city into what we want it to become and what we know it can be, or we're just bound to repeat the mistakes of the past. I thank you again for your time tonight in the past several meetings we've held here. The budget presentations, I really thank you for your questions. I mean that. We do appreciate your consideration, and we hope that the passage of this budget is coming to fruition in the next couple of weeks. So thank you for your attention tonight. All right.
Thank you.
Thank you.
Yep.